Dokie. I need some light. Okay. Maybe. Hey, what's up, Robbie? Robbie? Carly? Woo. Morning, good morning, good morning. Good morning, spaghetti. Yeah, I know, right? Thanks. Are we squeezing? We're waiting because just like anything else, you have a strong move. I mean, it's really like right after I got off yesterday, so it's kind of funny, but that's how things are sometimes. Yeah, I mean, I guess there was a little tiny gap that we needed to fill, but overall, I'd say this was a really, really positive sign. But it's like anything, it's like yesterday, we were talking about this as like kind of a negative because of the way it broke down. So, and I said, we just have to wait because if it has a hook, it's bearish. I mean, you can kind of tell in these setups when it gets to the very end. It never broke down beneath the creek, so the backup was successful in that it didn't fail. So we'll talk about that more as we go in here. We got like 30 minutes this morning. I wanted to look at some other stuff, but yeah, we were looking for a close above 45. We got that. It did push again to a new high here. The sell-off wasn't really anything worth noting. It just kind of sold back down and then sat into close at 506, which I talked about if you watched the shorter video yesterday that I posted. Still waking up, so that's why I'm a little quiet. But like this whole like setup here is fine. Like right now, it looks good. So confirmation is sort of twofold, right? It's like once you get the push above main resistances, and you're going to want to see it. Basically, you just want to see it work itself out. So I'd say at this point, this is an SOS because I was saying it's complicated, but like this could be thought of as a phase B top if it wasn't an SOS. It pushed up. This is a weird range. It's not really like a typical Wyckoff range where you have a really clear delineation between areas. I think that 485 area was just really critical because of that breakdown that we had. And then earlier there was a marker at like 483, I think, back here. So that's the reason that I put the support where I put it, thinking that probably was important as a move. Like we're going to need to kind of breach that. That puts us back in this other range. So if you're just looking at it in terms of, hey, I'm walking upstairs, you know what I mean? Something really simple. That if it finds support up here, would tell you that you're finding that comfort zone. You're trading now in a higher range. So in theory, that means that in any kind of a bottoming area would have been successful in terms of a turnaround. The danger, of course, was that when you have those advancements and then they're not able to continue to hold, which is what happened on Tuesday, that often signifies bearish price action. And of course, there was bearish price action here, but it really was just a corrective move. It didn't end up doing any kind of new low here. So I know that we've kind of gone through this a few times, and if you watched the video yesterday, you probably already saw this, but it was like right when we closed, I was talking about how there's this concept of like, we call it iteration, which is that you're seeing a smaller version of something play out. And I think originally we were looking at that bottom and we're like, oh, well, that's it right there. You know, it's walking out and breaking out basically this area right here. And then I mentioned that it's possible, this does happen sometimes, it's possible that you're really just experiencing like an early cross. It's kind of confusing if you don't understand the concept of iteration, where you're seeing like a similar pattern, but just on a smaller scale. So instead it's like, oh, and maybe this is not the best way to put it. Hang on. Maybe instead of like thinking about it in terms of a kind of this size scale, and that's the bottom, that's it, you really could have thought about it like this kind of business, right? And this is kind of where we are, I think, in terms of my analysis anyways. Like I would be like, yeah, I think it just formed out a larger setup, probably to some degree to delay the price action. We still don't know with that 450 max pain how this is going to play out, but this is pretty typical. So it's the same structure that you see on the micro essentially. And a lot of times the problems, this is one of the problems I've always found with any kind of fractal analysis, is that you could be early, but not because you're wrong, but just because you're looking at it's really not even about timing. It's more about just scale, which is a weird thing to think about, like that you could have it right, but be early because of scaling, not even because you think this is something and it's not, you know, which is a lot of times it's like, oh, you think this is something and it's not. Well, then you're just wrong with your interpretation of whatever that bottom is. So sometimes, and I mentioned that Stockfather told me, you know, that's pretty normal for Wyckoff traders, is like you get to that, you see that these initial moves and it's hard to pinpoint exactly. If it's hard to pinpoint exactly where that top and bottom and all that jazz is on the reactions. So I was kind of operating under the principle that this is probably the auto reaction right here at like 495. And this would be like just a secondary support. And so if you want to mark off some levels this morning, just for support areas, there's like 3 up here that I would probably use. And they just delineate pushes on resistance, changes in the direction ultimately. And yeah, they basically are like tops here. But the one big one that I was really concerned about was like that 482, 483 level. And I said we really want to get above 45 and close. We just could not seem to do it. And the next one will be right here. So this will be at 511. So you also want to mark off 511. So I've got a few marked off here. So 511 would be more like a phase B top. This pushing above it would delineate like an SOS again. And so you do need to close at this point above 511 at some point. Now you'll notice that like I've got 3 marked off here. One is 497. One is that 482 level. So I'll put them over here so we don't forget. 482, 497, and 511. So those 3 levels are these levels right here. And here's the thing, right? And this is going to be the danger today into Friday, I think, because of the nature of like what max pain is and how it can interact with things. There's really no reason why we wouldn't necessarily, I mean, like it's possible. I'm all for a big run right now, okay? Like, this is a possible confirmation if we hold. I think the close above there was a really strong sign. The volume pickup was a good sign. But I'm just being, like, realistic at the same time. Like, going into a Friday, it's not impossible that this kind of coasts up here in this little pocket. Like, our advancements can be sort of slow sometimes. You may still have like a considerable backup here, because again, at this point, it's like the way this is breaking out, the way that it's advancing has been very like even keel. So I don't want it to come back beneath this trend. Don't get me wrong. Like, this would be a much stronger exit. So staying above here and finding support above specifically like 497 now. I don't even really want to go back to 42. That would be really strong. But if I'm being honest, just based on the way this has been going lately, just every single time we've had these advances, there's been considerable pushback. I would say at this point, unless the selling is like completely absorbed and it's just gone, you still have, I hate to say you still run the risk of any kind of distribution, but you still have a possible chance of like this going sideways and down basically till Friday, and it may seem like that's not possible, but Friday is quite a short distance away now. So, it's not unheard of. We've seen this kind of crap before. So I'm just trying to help you brace yourself. Like, this particular lower trend comes to 462. So like, that's not max pain. It's obviously above it, but that's really close to 450. And then if you look at the creek, and I was talking about these guys, these parallels is not really like officially like a creek, but if you look at this, that also is an intersection at the same marker right here. So there is a chance here that we see more like down, and just walk back down again to a lower level, a lower creek level, I should say, and just brace yourself for that. I'm all for like the takeoff, but like, I'm just saying, head and shoulder target here was, I don't know, just tomfoolery, right? Like, it's always the same on Fridays. You can either get something really spectacular, which just very rarely happens. That's like your 1 or 2% of the time, or it just coasts into Friday after most of your price action has taken place already. I would say this middle of the week price action on a Wednesday usually is a pretty good sign. I mean, we don't typically start big moves on Wednesday, Thursday unless we're going to follow through. And then you typically get a nice follow through from Friday's price action if you're set up well. So at least on AMC, the moves that have started on like a Wednesday or Thursday have usually had some pretty good follow through set up on Friday and then going into Monday. Usually. So head and shoulder target is actually this little cliff here. I think this might be one of the few gaps that we actually still have on AMC. You can see it never filled it. And the closing value gap for that. So I did the head and shoulder targets yesterday. There's another gap up here. These are pretty much all the targets that I was getting using that other method. So at this point, it's not like 688 is what it looks like. At this point, it's not really that unusual to me. Like, I'm seeing that we're finding that they're probably all about the same level anyways. So whether you're using gaps or using fibs, oops. I was using the up and down arrows, messes up my chart. Doesn't AMC usually start big runs on Friday? I mean, I guess there's been times. This is a Monday move. So you see how like it sets up Friday and then Monday it just rips. Like, Friday had confirmation. Like, this is, you got like 2 seconds of confirmation, like right here, at the very end. And I think even that, remember, if you had to use like extended hours to really see this break cleanly. But I would say like, that's not, I don't know if that's particularly a truth as opposed to just sort of something we've observed here and there. And then I honestly don't think there's very much of a case for any particular day of the week being better than others, other than Monday just usually having larger volume, which is kind of a market-wide concept. So, I mean, you guys feel free to disagree. I just feel like there's been plenty of times where we've had runs that started on a Wednesday or Thursday, and then most of the time, though, you get a lot of that follow-through on Monday. So, I don't know. It's debatable. One could argue that perhaps the earlier the run starts, or maybe if it's wrapping around a Friday, the better. So you could get some gamma squeeze, but going into the following week, push some calls into the money. You know what I mean? And vice versa would be true as well. We've probably had some pretty big drops into a Friday, but I'm not going to go back and look at every single one. So I'm tempering my expectations because I want to make it clear that oftentimes the setup might be into Friday, but the move might not be Monday until Monday. So, and in this case, Tuesday, because we have a 4-day weekend. So it's even more so like a question in my brain. All right, let's try to find this gap. Looks like 548. Yeah, I got 547 as one of the targets yesterday for that head and shoulder. So that during that video, if you watched it, you probably saw me measure it out. That would be my main anticipation. So if we were to get that move, again, even still, I think you could potentially make that move and then still have a backup into Friday. And so that, again, is when you're watching this, we might close Friday at 5 or something. You know what I mean? There's just a lot of potential here for, yeah. Just come back down, check a level or something like that. But that wouldn't surprise me. I think the weirdest thing in this particular case would be just to run, just keep running. But that's pretty unusual, especially on going into a Friday. So that's all I'm going to say about that. I wanted to mention, so I looked at a couple things yesterday that my group was looking at. So Lucid is sitting on a powder keg right now. So there's a massive divergence on the daily going all the way back to January. So this is a very, very long-term divergence. It's very similar to what we saw on AMC, GME, and ChargePoint. So if you're looking for another play, I think Lucid is probably a decent one right now. I'm looking at confirmation, and I'm looking at where it just went. It seems that it tried to push resistance, and it's doing a little bit of a backup now. We were just talking about that concept a minute ago on AMC. So at this point, it's a little bit of a dangerous, I guess, move because there's a giant macro long-term RSI divergence, right? We're just talking about that. RSI is building up some pretty strong momentum while the price has been coming down for the last 5 months. But locally, there's also a divergence here. You can see on the daily where we're making a lower high right here and a higher, as we're making a higher price. So just be mindful of that because it's in a spot right now where much like everything we see, this could either just make or break, you can kind of see how with that downward, we'll call it a wedge because it's similar to enough to a wedge. It's not a very strong one. It only has a few touches on top and bottom, but it is a narrowing price action. It's basically boiling into that corner right here. So debatable, does the longer term divergence just kind of outweigh, this top divergence, or does it need to have a pullback before continuing? Big shoulder shrug from me. I think that that's just one way of interpreting price action. So it might be wise if you're in this play to just continue to look at everything. I'd say that on the whole, it looks really good, but it would not surprise me if we did see some kind of a pullback, here, maybe to come back down to like 250 support or something like that. And then perhaps, build your way back out. So where would confirmation be for this? Probably, jumping above like $3 at this point. I mean, clearly it's trying to, like, you can see the flush down and the flush up. It's trying to see if, there's going to be a need to go down for liquidity. So if you're looking here, you can see there's like a localized little pennant. It's really small. So you just be watching that, because I think that either way, it could be really bullish regardless. I really do think it is. So if you're in Lucid, that's where I'm at with that. I might trade it because it's got a decent chance of hitting, by about June, hitting like this like 440 mark. Now, some of you might say, if you're in that stock, you might say, well, that doesn't seem very high. But if you go back and you look at where that is, it's essentially like on this after this massive slide, it would be like a return back to that level. This is also like an all-time, we can call it like a creek at this point. It was maybe a trend at one time, but it's been broken. So that makes sense. And then if you look at the long-term downtrend, that's actually where those two peak wicks come from. So it makes sense. That would also be a test of the daily 180. Like, you'd have to push it. Previously, anytime we've kind of pushed it here or here on these last two tops, we've rejected. So for this one, I would not expect it to just advance like dead on. It would not surprise me if we did get the return to like 430, and then maybe going into like earnings or something, we kind of sit back. If we're gonna advance, if we're gonna see this kind of move, come back down to probably like a previous support level, maybe 367, since this is like a top over here. So that kind of longer term move seems possible. Like later, in a later time, this could be a really significant breakout, but I think that you're likely going to get some longer term price action. This hasn't happened yet, so I don't want to read too much into it, but this might also help determine some of that, like where that might go. So if you end up with a pullback here, then you would want to make note of where that bottom is, because later it could basically help you determine like where that pullback might go to. I just don't feel like it's going to just hit that and advance. It might, I just think that that's a reasonable target. So if you're looking for a trade, Lucid's not a bad trade right now. I think it's in a place where it's got the markings of a big turn. That's a 50% move. So significant returns on that for fairly short-term investment. I mean, you're talking about a month, like basically a less than a month, which is a lot. So charge point looks good. So the spaghetti was right on this time. So that downward creek was hit. You can see it kind of went close enough, there was kind of this fake out drop here that happened. That was concerning, I suppose. I really wasn't watching it, but it was basically pushing beneath EMAs, pushing beneath that trend, as you can see. And essentially, like, that was the correct way, I think, to look at this. I found that triangulation, and it looks good. So I'm not particularly worried about any of the price action thus far. Basically, we're just doing a giant like M cross, and you can see it. And now that gap is filled. So it's creating another gap this morning. Could be problematic, I suppose. For charge point, I'd like to see it find support where it did, which is at like 179, and that's good. So now it needs to jump this creek, and it'll be good to go. I'll show you really quick. Excuse me. And charge point's another one in that basket that I think is really primed. It had that really long-term divergence, just like Lucid. I was just talking about that. just like AMC, just like GME. So another one that might be helpful to help you diversify a little bit if you're just looking at these kind of aggregate plays as a possible basket to play. There's always going to be winners and losers, so some of these might do what you think they're going to do, and some of them might not. And that's one of the benefits of diversification is you don't have to put all your eggs in one basket. It's tempting, you can think about hitting a rich, and obviously that's a very tempting thing, but more often than not, you're not going to get those kind of plays. So it's better just to think about it in terms of like safety, I would say. That's my own personal opinion. So yeah, maybe this needs to come back down for the gap fill at 180. I don't really mind either way. This could also be one of those things where we kind of coast up into Friday. Excuse me. If we get above 190 by Friday, I'd probably be pretty happy with that. So I'm going to put a little alert here at 190. I think I'd be pretty happy with that as a possible confirmation of bullish strength here. That's to jump over the advance over the creek, where this would be like a spring-like action, and then found support, retest. You might have to do a backwards move here because of that gap, but then possibly into Friday advancing. Always these things could go faster, but I tend to kind of err on the side of caution with a lot of this stuff. So yeah, and at which point, much like you see here, I think there's a pattern of swing that we might expect. So I think that you're looking at this as a potential swing around this kind of midline on this waveform, and that could give you a pretty decent yield as well. So assuming that there is a 180 bottom, I think this thing could probably go up to 250. That was roughly where the next level is anyways. That's like that next kind of main resistance level right here. I'm not even going to look at that line. I just know if I put it there, it's probably important. So I'm just going to keep it there. That's roughly where I thought it would go. That's a 237 mark as well. It's previous top over here. So everything kind of lines up to give you that wrap here. So that's a big move as well. That's a 33% move. That could be pretty fast. This thing's been moving. So yeah, I think Lucid looks pretty good. I think long term, you might see this return back to 430. I think that's a decent target. I think charge point's looking pretty good. I think it's ready and primed for a possible move back up to that 230, 240 area. That's a 33% return. I'm kind of just going through my list here. So MPW is one I've got a little bit of concern about, not because I'm like bearish on it. I'm still really bullish on this. More so because I think it might drop for that gap. And if you've been following me on this, I'm obviously like playing options on it. I've talked about it. I got out of some of those options up here, but I held some thinking this pullback might not be so severe. But it looks like that little gap is either being teased out or it's going to be really, honestly, it's going to be filled. So I'm kind of expecting at this point, you can see the little S-curve coming down. If it's not a shallow S-curve, you are at risk of basically coming all the way back down to like 436, which is pretty low. And I think at that point, you're then like thinking about this other lower gap way down here at like 406. And it kind of begs the question like, oh, are we just going to go for a full-on, pull back all the way down to like 406, 402? I don't know. I don't think it's out of the question. We hit the outer kind of mark in terms of like the downtrend that I was expecting us to hit. We kind of hit that upper mark as well. Like at this point, the inverted head and shoulder target was already hit. Like there's just not a lot of overhead targets until you break this orange line coming down. So I'm in leaps. It's not like I'm like looking for a rush play or something, but I'm just kind of thinking about this and thinking about like, well, if I don't see that gap fill cause a reaction, and I'm on the 2 hour, you can see that EMA would be like right around the same point. It's like 479. I'm probably not going to stay in my calls unless I see the break. I might exit and re-enter when I see a break. Because at this point, they're not bad. They're still positive by quite a bit, but they're not like great either, you know. And I think if you see another significant drop here, they're probably in my own portfolio, they're probably just going to drop back to like a 0% return. And for me, that's like, well, I don't know. You know, I don't like having to scratch on a play, but if it happens, it happens. I'd rather just then wait for confirmation than just sit there and hang on to them. In the event it did go down, it could be this lower gap, which is really low. So I'm not feeling that right now. It's not exactly what I'm thinking is going to happen as most likely. It's just something in the back of my brain. So I'm watching really carefully. If it goes down to 479, I just want to make sure that, that it doesn't like ultimately kind of wreck through there, I guess is what I'm trying to say. So that one I'm watching pretty carefully. I did check. All right, looks like the market's open. So we're going to open with some gaps here and there. AMC is actually opening low. So that means it's got a gap above, just slightly. The rest of these guys are opening a little higher. It looks like Lucid, the same thing. I also checked another one that people were talking about, which was Barnes & Noble Education. I'm going to preface this by saying, like, I don't have a position here, and I also think that it's kind of it's a difficult play to really read. So I think a lot of folks are really bullish on this because they just saw this massive move. But you have to keep in mind that sometimes, as we've just seen, you could get a really massive move that then results in bloated options contracts and everything, and it really needs time to cool off. And you're going to have people selling options while that volatility is really high. Just be mindful that it could be that this is like halfway through like AMC was, or it could be that it's kind of done. I mean, this was a huge 700%, 800% move. So I kind of get the feeling that this might be a bit of a stretch and it might be a chaser for folks. I don't like those plays very much, like where I feel like it's already made like a humongous move. So I personally don't feel super comfortable with this Barnes & Noble play. I know some other folks were looking at it. There was one other reason. I think it was because it was at a previous, So there's a widening that was happening, and then the widening broke down, and then it reversed. If it had gained support at 46 cents and it breaks to the upside, your initial target is probably only going to be like 321, which is, again, it's really far as we can see on a chart like this. It's pretty far. I mean, that's not a bad move. That's still an additionally pretty huge move. But I was noticing that the place that it closed was actually beneath a previous floor. So like for this play, I probably would not invest in this, even though like you might think you're getting a deal, because it just ran like 800% and now it's got some space. It could definitely see a cool off. I do think this is an advancement over a creek. You know, you can see it pretty clearly on RSI. It looks like the traditional M shape that we see. And so maybe it's done with this pullback, but maybe not. I mean, you can tell like clearly like we might see some more downside here. Or, it could be it's ready to go. Either way, it wouldn't matter to me. Like I would still say that looks fine as an initial cross, but I could see it having sort of a cool off, and then also the fact that it dropped this level, I just find that to be really, and really it's like up here. It really is right where it went to. So you see that wick. It's just a very difficult play. Like if I'm going to play it, if I were you and I were playing it, I probably would draw like a really simple trend on this tight rise up and then watch and see if it's broken out of that. And then I would wait maybe for lower time frame confirmations of a turn back up before like investing in it. So I think it's a bit of a chaser. And I mean, it's down 34% today. So if you bought in yesterday thinking it was going to keep running, I mean, it's a pretty massive turn, So yeah, we'll see what happens. I think that this is going to be one of those days where, the bears are going to kind of strike back and try to attack the stock. They see this, they're going to think, oh, it's overbought. Let's try to slide it back down. Pretty typical. You're going to be shorting that open. So we'll just see what holds. Yep. I haven't talked about GME yet. So GME is not really in a great spot. I kind of mentioned, I know there's a lot of squiggly on here. I'm going to get rid of this one. Get rid of this. I mentioned this seemed like a possibility with the way this was setting up. So what that is it's a more of a distributive action in terms of local distribution. But it could end up being fine in the long run. It's just that right now, it seemed like that was a likely path because of the fact that it did not breach this top. So because it didn't breach this top, there was a chance, I had it over here, that this comes down. So this did go higher, clearly. It did advance and start a new downtrend here. That downtrend is largely held. So at this point, GME to me is not like a strong buy at all unless it comes back above here. And I said 22.17. It's probably going to be a similar level no matter if and when that ever happens. And otherwise, yeah, I mean, a lot of folks have talked about this. They've said like, well, it's diluting. You can't, it's going to go down to 10 or this or that. Look, I get it. Like, I really do. Dilution can cause a stock to drop like a rock. We've seen it on AMC. I'm telling you, like, my initial thought as a reaction to this big move is that we're going to get a shakeout. I don't think that it's just going to go straight down, but with that news in mind, could it just continue to drop? Sure. I'm just kind of waiting right now. So right now, I think that this is in a position where you could end up coming back down to 1960 something. We're back down to 20 right now. That 2018 has been a really important floor for a while, and it may be more like 2010 now. Yeah, maybe something like that. I had it at 2018, but whatever. Put it where you want to put it. It's in that little pocket there. It's more of a little range. It's been finding bottom slightly different spots every time, like 1 penny off every time. So yeah, it's in that little pocket though. So like that doesn't seem out of the realm of possibility. And then the creek is pretty low. So it's actually down here. So it does mean that you could possibly come down and get a full-on double bottom, or even, come a little lower than that. We'll see. But regardless, it's not taking this upper path. So AMC in some ways looked a little more bullish yesterday. It advanced. GME did not, but both of which could have a pullback period, So you just got to watch for that. So once again, bulls are kind of not showing up right away. So we'll see what happens. This is a very low volume sell-off thus far. I'm on the 6 minute, so we only have like one candle. I'm talking really fast. We're going through stuff really fast, but really the market's only been open like 7 minutes. So that's not a very long time. Like it's not even really wise for me to say that this is like a breakdown at all yet. It's just kind of, it's too soon. So give it like 15 minutes and then we'll see what happens. Yeah, right now the volume's like really low, so it looks kind of weak, but we'll see what happens if it does push through like 485 again. That's kind of another one I'm like, all right, you don't want it to do that because it brings about more likelihood of rejecting, and again, getting this kind of sideways action, especially if the volume's sucked out of it. A low volume sell-off here, again, it's too soon to tell. There's only like one candle here that's completed on this time frame, but a low volume sell-off here wouldn't be a big deal. It could just be like backing up to test something. If this were like dumping this morning with really significantly high volume, after that top, I would be a lot more concerned. Yeah, the peak volume is in the top. That's not great. But if the returning volume after the drop is really light, that can just be like a pretty standard, pennant or flag or something. So, yeah, nothing really to say about it just yet. That's why I wasn't like rushing over here to talk about it. Most of the time, you can trade the high volatility in the morning if you're, trading, quick swing trades, kind of scalping the stock or whatever. You definitely could do that, but for me, the first 15 to 30 minutes is usually just a primer, and then I don't really worry about too much about, unless I'm trying to get out of something, like immediately, I don't really worry too much about it, because there's not really much point in worrying about it. The price action's barely getting started. 15 to 30 minutes into the day, then you have a little bit more to go off of. You might have a better way of kind of measuring your trades at that point. So it looks like the end of the day spike yesterday across the board is getting kind of rug pulled to some degree. All right, back to 485 again. Here we go. 483. Yeah, I'm not convinced we're not going to just do this crap I was talking about, this sideways stuff. I'd like to see, so what would that not look like, That's what everybody always wants to know. Well, I think if there was strength and determination on the bull side, you're not going to break 42 again. You're just going to take off. This has been tested so many times and turned into supply. I mentioned yesterday, and I think I said it, but it's like 1, 2, 3, 4, 5, 6. I mean, and then if you have like after hours on, it's like 7 or 8 times it feels like this has been pushed. So it's been supply for a while. At this point, it just doesn't make sense to keep turning it back over. Maybe because they're finding so many sellers here at this level, so they're using it as a way of, again, building up the volatility and all that jazz. And then shaking out both buyers and sellers probably at those levels. But it's just silly, So at this point, I really don't want to go back beneath 482. And I get the feeling that if we did go back beneath 482 on some kind of weakness, that we probably be in this scenario where we're going to just kind of come down and camp into the end of the week. That's why I'm like drawing it this way. I think what would be better is to see a low volume sell off here and then to push back above and find support at 498. That would be really positive. And that might indicate that bulls are done with that level as a supply, and we're going to, as a supply shakeout. Now it's demand. It really just depends. They have to buy off this level, though. We just haven't. I mean, yesterday, clearly it did. There's a lot of buying that happened off this level. But you have to remember that, like, there's a reason why distribution often has spikes above the top, right? It's usually because somebody's trying to sell their shares higher before a mark down and or load up on short positions, right? And they're shaking out short sellers usually here in these kind of up thrusts. So regardless of if it's distribution or accumulation, that's always part of it. Like, they are shaking out shorts, which might seem really weird, but the concept of share availability is really important to institutions. Like, they want to make sure that they have the bulk of the control. So they're always trying to get shares from weak hands into strong hands and vice versa, depending on if it's a supply or a distribution or accumulation. And you can go look up Wyckoff theory and stuff. I totally believe it because you've seen it so many times. It's an actionable thing that oftentimes that's what happens, right? Is you bring the price up high, and you see these high volume tops. And if you don't see that support come in, it could indicate again that that really wasn't the interest there. You know, like the interest wasn't just to buy; it was to really to sell and to trigger buy orders from weak hands, essentially. Or, you know, in the case of a short, to trigger a short covering, you know, which makes there more shares available to short. So you got to think about those things, you know, and that's why it's so important. I mean, gosh almighty, I'm so tired of saying it. I'm glad I took it off the screen, but I've been talking about support over 485 like all week as my confirmation. So yesterday was good. I think closing high was good, but after that kind of a close, after that kind of a push and close, strength here would definitely be returning back above 5. And if we get pinned, I don't know. Part of me thinks that bulls are just gonna kind of let it go wherever, you know. It may not come this low, but I could definitely see it coming back down to near 450. So, yeah, GME's gotten a little bit of a pick-me-up. Again, we've only 15 minutes into the trading day. So I had a little bounce. That wasn't on purpose. It looks like it bounced on my arrow, but that really wasn't on purpose. That was more just to illustrate possibility here. So we're still looking for support, you know, higher support here. We want to make sure that it doesn't distribute. So yeah, it's probably this guy. It's hard to tell because I'm on the 30-minute, and this is a pretty tight little structure, but there's a little support right here. You can see that little backup right there. That's the low. So it advanced higher, and then it made a new low, and then it advanced again, and that's kind of what I'm looking at as that creek cross. It's probably pretty close to it. It does look like it's targeting perhaps the 2010 area or even lower if it were to continue down to like 1970. And then the bottom, of course. So we're going to watch out for a hook here on GME. Yeah, so it's already generated like partially. Kind of trying to get rid of that squiggly action over here. Just really focus on this. 15-minute RSI is turned down. Let's see 30-minute is turned down. Let's see what the 15 is. Yeah, same deal. Here, I'm going to clean up this chart because we don't need a lot of this stuff. I'm just going to go through and I don't know. What do I want to get rid of? Let's just hide that one. I don't want to hide this one just yet, although it did get met, so maybe it's done. I think it might be important later. That one, this one we could definitely hide. These ones were for that build out that I was doing. It was really just for me. That didn't happen, so we don't have to worry about that. These are just extra notes that I made. This one, I don't know why I made this the way I made it. Let's just chill that one out for a bit. These are fine. This one's fine. Not sure why I have 2 downward trends there. Oh, those are creeks. So I'm going to get rid of the lower one. So I don't need that one. I don't really need this little diagram. Let's get rid of that. And then these are probably the 2 more relevant ones right now. I'm going to lighten this up. So this was the previous support here. It may still act as support later. Oftentimes these guys where they intersect, you end up with a really important level. So like right now, and maybe it's debatable how I draw that, but right now it looks like it's kind of intersecting near the bottom. We don't need double these. Yeah, maybe it's steeper than that even. I kind of have it drawn more sideways like here. But I think you could do that. Yeah, it's pretty low. It looks like it might be an attempt to. So what this tells me is that there was an advancement and then a retreat, right? And then where it found support versus, so you've got basically like a supply versus a demand zone. Like that's the reaction was way high, right? But then here's how far it came back, and that's where the demand picked it back up. So when I look at this kind of stuff, I'm not sure if I'm getting this across very well, but like this is kind of what I would do when I'm looking for a lot of times for creeks is I'm looking at specifically like where was the advancement and then where was it bought back up. So that's kind of it right here. You see that? And that tells me that there's some kind of a trajectory here that's in mind, like probably on the seller side. Because again, supply and then how low can we push it down? And then same deal for the upside, but for the upside, you'd be doing it kind of in reverse. Like that's where we have, that's what these upward trajectories come from. What I've noticed over time is that the downward trajectories tend to be pointing towards I don't want to say an ultimate end, but that's kind of what a lot of times we see is that they're pointing towards some kind of probable target. Not always the case that you get there, but I think our gap, again, is pretty low here, so that wouldn't even be a gap fill, but this formed out really different than AMC's chart. AMC is still sitting at 489, so it looks good for now. It's kind of lost all its volume, though. I'd like to see it push back up on low volume and find support on low volume and then pick up with heavier volume. That would be nice. Because the low volume push up here is like there's not very much resistance. And then they didn't knock it down. That's good. And then what you want to see is a pickup on high volume. You don't want to obviously see sellers just dump their volume on it because they're like, oh, buyers are weak. It's hard to interpret those things till they happen. So once it happens, though, then you're like, oh, that's pretty strong. So if you see them, if we see ourselves push back up above 5 and then we lay on 5, that's when you want to see that big volume pickup on the bull side. Yeah, so it seems right now that there's definitely like a tendency here to kind of drive it low. Seems like that's in mind. I would say on the whole, though, this doesn't look bad. If you look at this as like this is a selling climax early, then this looks kind of weak because it's like, well, it hit a selling climax, then there's an auto reaction, then it makes a new low. But oftentimes, as we've seen with like AMC, that's not really like the full auto reaction. Like this could still be your auto reaction. This could be a phase B top, but I think that this could actually be the auto reaction on the 20th. In which case, you can see the structure of this isn't really that big of a deal. It's kind of like, oh, it hit a low and now it's, making a higher lows over here. And it could come down and make a spring and still be okay because it hasn't done anything extreme to, advance above these two early reactions. So somebody else mentioned like diamond here. I think it's probable. Diamond structure is very simple. It's basically just widening and then narrowing. It doesn't have to be perfect to be a diamond structure. It's harder to measure when you don't have a lot of touch points, though. So like I've got this on the regular trading hour right here. Not sure if I don't need this on here. I think I already have charge point on another chart. So AMC's at 497. It's kind of just sitting here. So what I'm going to do is I'm going to do another GME chart. And I'm going to look at squiggly squaggly. See, these didn't break out early. Actually, it was really close to this one. But obviously, failed to advance. Went down low. It did break out on that level, but it took a lot longer. So let's get rid of this older stuff. as is often the case. So what we'll do here is, still it's got that head and shoulder vibe to it, which is a bummer. You can kind of see that motion would be really detrimental to the stock if it finished. It's got heavy selling volume right now, so try to take it down quite a bit. AMC's kind of holding, but it rejected off 5. So 5 is now turning into another kind of a 482 type area, or we're sort of advancing and retreating really quickly every time. It's not what we want. We want to take off here. Let's get off the 4 hour. This is where I was saying I thought the 4 hour is missing like a move. The more this goes on, the more I'm concerned, because it does seem that it's not making a move. Like, does that make sense? Like, as this is staying really flat, it's like, I don't know how exactly this is working out, but it must be the way in which this price action's playing. Yeah, it seems that this is a diamond type structure, but it seems like this is playing sideways. So you could have like a pretty strong reaction without having any kind of move up, which would be really a big bummer. That's what I was talking about, where there was like, it seemed like there was a need for, we were way back here when I was talking about that. So that was last week. And I was talking about how like this seemed like there was a need for that recovery, and it just didn't really, I don't know. You can make a case for that not happening now, you know, or a really weak one. Weak move. AMC's at 488, still holding above that level. Yeah, GME is looking not the best on the bigger picture anyways. The smaller picture didn't seem that bad to me, but maybe that's a breakdown, you know? So diamonds break both ways. They don't just go up. That looks like a bit of a cat ear, which of course we already knew. So we'd be waiting to see where it goes. I didn't draw this guy. That would be important as well here. Actually, I think that's probably more likely than anything else that I drew. I really wasn't looking at that earlier. I didn't have it on this one. That goes a lot steeper. Yeah, that's probably the one I would use. Anyways, so a diamond structure is a good trading pattern, but you also have to remember, like, it doesn't always break to the upside. So just because you've got like a perceived diamond does not mean it's super bullish. Diamonds can break either way. So if you do have that widening and then narrowing, you'd want to kind of pay attention to the direction it breaks. Like anything, you know, this could be a simple reversal process where you head down to whatever the target is and then you reverse. And the range itself may not actually be overly bearish. I mean, there's been plenty of times where these could have like a pretty strong reversal in the end. It looks like they're just targeting the gap. I mean, it's almost a perfect target for that gap level. So, yeah, I mean, probably couldn't draw that any better. Let's see here. So, closed at 1749. I mean, it's right there. So, yeah, unfortunately, I think that puts us in a spot of great uncertainty, because it certainly looks like it's going to go down and try to fill that gap. To me, anyways, that's what it seems like right now. So that would be like, oh, you're possibly coming down to that 1749 level. I had been talking about teasing the gap where you don't get the gap fill now. I think you could still make a case for that if it catches early enough. near this bottom or on any of these other creeks here and advances, then I'll just say, no, it's not likely going to go. But the target for that diamond is pretty clear, like pretty straightforward, you know. So that's obviously what bears are going for. You could say bears. It could be bulls as well, but yeah. So I think conceptually, a lot of this has been in order to. This is where we needed to see the advance yesterday, right here. And you can see why that would have been really important right here if we'd had that advance. It's kind of another way of looking at this. Yeah, you can see why that would be drastically different from what we experienced here. So that rejection was very calculated for now. That's the direction it's heading. Yep. We'll see. Yeah, and then it's hard to say because until you see it like kind of hook here. So if it came back up, which I might expect as a possibility here because it hasn't tested that support or that resistance yet. It's a possibility. I'm not seeing it here either on the smaller time frame. So there's a possibility we get a decent bounce here before going any further down. I mean, clearly this hasn't always been the case for GME or AMC. Sometimes you just drop and you don't go back until later. So it's possible that you get the drop and then it comes way back up later, you know. That's not even a question in my mind. So it would be nice to see this push up and get the confirmation, just like we did on the opposite side. We were looking for that push up with the pullback. Well, pulled down with a pushback up could be confirmation on the opposite side. Yeah, I think a double bottom at this point, in maybe even a little micro spring action isn't even out of the question. It's just a matter of where that happens. So hang on. So this is low at 2005. Make sure I get that number right. So that's actually gone lower already. Yeah. Anyways, all right. Well, that's that for GME, unless it turns. It's kind of like the AMC situation. Like it broke down. It could still reverse, but it seems like it already had an opportunity to do that, and it failed here to reverse successfully. And I'm not making this like the strongest trend in the world, but it does seem like this has been broken for the most part. So I've heard a lot of people say on my chat and in the videos and stuff that GME or AMC can't run without GME. Like they have to move together. That's baloney in my opinion. I don't know about the big moves, but like remember how long this has been going on and like how often they don't move together. Like I don't even know why we would have to even prove that at this point. Like over the last 3 years, there have been plenty of times where they either have not moved in sync or they have not moved to the same degree. And one example is just very simply during the big run up. I mean, AMC had a whole second leg that basically doubled, I mean way more than doubled the price, but GME did not. It never returned back to those January highs. I mean, like, it's a simple example, but that's just like one example of, you know, they don't always move in tandem. And then there's multiple other examples. Do I think that they need to move together in some ways, like in terms of this like basket mentality? Sure. I think on the whole, all of these stocks that we've been talking about, or a lot of them that we've been talking about, they're all smaller cap stocks. Like they're going to be running in groups oftentimes, you know. But I don't think that that's a nasty sell-off on ChargePoint, by the way. I don't think that yeah, I didn't want it to go that low, but it is filling a gap, so we'll see. It needs to just find its footing here. Higher low would be good. I don't think that on the whole, like they're going to be 1-to-1. These stocks are going to have some differences, and you're going to have times where GME might hold a level and AMC doesn't, and vice versa. So we get the gap fill here. AMC's at 501, so it's back to 5 again. 5 has been a little bit of a selling wall for AMC right now, so we're gonna wait. I mean, you could argue that you could just tell me like, well, why didn't you just say 5 the whole time? Why are you talking about these other weird numbers on AMC? I mean, it's because it wasn't 5. I mean, it was these very peculiar numbers, mostly because when we came up and when we came back down, these were the ones that were used here and here. So they were not even numbers. Like 497 and 482 were the numbers. Like I don't choose that number. That's just the way it appeared as we entered this range. So yes, $5 on as an even number usually is going to provide a strong support or resistance just by the fact that people like even numbers. It's a self-fulfilling prophecy kind of thing. They like the idea of buying and selling off even numbers. So typically you get higher liquidity around even numbers and on 50-cent intervals. That's very normal. But I'm not specifically saying 5 because I don't think it's specifically 5. It's 511, 482, and 497. So this undeniably looks like support, which is good. We had the similar thing happen the other day, though. We had that backup on Tuesday. There's a pretty strong difference between the two, though. Notice that, like, this was a single wick on the 6-minute, and then it just kind of crashed back through it the second time. This is a lot better. There's a lot less selling going into it. And then you have a very light volume pickup that's kind of retracing all the way back up. And I mentioned that you want to see it, as an SOS goes, you want to see that big buy-in, a low volume sell-off, and then you want it to kind of pick back up on lighter volume. And I don't really want it to breach the top until it's ready to go. So I don't really care if it stops at 511 right now or if it advances, but I'd like to see it have a small pullback and then have a big volume pickup. I don't really anticipate it just rocketing, but I guess it could happen, you know. And I know people really like that with streams. They get all hyped up. But I'm like more of the opinion that sometimes less is more. You get a better follow through. So I guess we'll find out. The light volume is starting to pick up, though. You can see it's like increasing. You don't want to make a higher you don't want to make a higher top, though. Generally speaking, we did the same thing on GME that one time. If you remember, I was like, "Oh, we don't want to make a higher top right now because," so that broke. You don't want to make a higher top right now because if you make a higher top, you could have divergence and all this crap. This is the 6-minute, so it's not the end-all be-all. It's a pretty minor. It looks like on the 15-minute, it's the same deal. If you made a higher high right now on lower volume with lower RSI, that could be bad. It just could signify a bigger turn. 30-minute looks okay. It looks a lot healthier, and it never actually got bought. Let's go to 1 hour. Yeah, 1 hour is fine. There's really no like cause for any alarm on the 1 hour. And that wick on the 1 hour, which we're about to finish in about 20 minutes here. That 1 hour candle looks really nice. That's what I wanted to see on Tuesday. We just didn't see it. So we're seeing it Thursday, though. That's the good looking candle. Really clean, right off of that 482 area. I think GME, if this diamond has follow through and if it breaks through these floors without any kind of a recovery effort, I think GME is very likely going to try to fill the gap. So it has a strong chance. You know, this setup is called a diamond, and a diamond can break either way. It can break to the upside or the downside. Right now, just saying it how it is, if it were to continue to the downside target is like straight up perfect to that gap. So maybe it's meant to look that way to get sellers on board and to try to have them take it down, and then it's going to reverse. But you can't really anticipate traps like that. You just kind of have to play the chart until it changes. So that's the way I'm about it anyways. I feel like anticipating traps is always kind of dangerous because you could end up playing against the trend and you could be wrong, you know. I had a suspicion, and I've been talking about it. I had a suspicion that we wouldn't fill the gap because I thought it was going to react on a higher time frame, but the RSI on the 4 hour anyways has been really flat, and it's kind of meeting that moving average now without having any kind of serious push up. So at this point, this has been a very successful action to kind of stop. I won't say RSI is everything, but just kind of, if you think about what RSI represents in terms of being overbought and oversold, this is a good pause for all the price action regardless. So it was a successful move. You know, short term, I could see this having and this is like this little diagram down in the corner. I could see this having a push up. I mean, it looks almost exactly like what I drew, right? It may not seem that way, but this is a very wide sideways action for this guy, you know. So if you want me to like redraw it, I could do like this, and it might suddenly look like, oh, it's the exact same thing. You know what I mean? Like, it's pretty close. So this could appear to us right now to be a diamond that's breaking down, and if it holds, especially if it holds higher here and it can advance past this creek, you could have a pretty magnificent reversal. So again, this target in mind is very evident. There's no doubt in my mind that it's targeting the gap. That's almost painful how perfect it is. So don't be mistaken. Like, from center liquidity here, that's almost exactly where it broke down. It's a direct price target to the gap. So that's a possibility for GME. And the only way this comes back up right now is if it jumps this creek, this downward trend. And it's again, like the diagram, you're kind of looking at it like it's a potentially like a bottom that's more of a Wyckoff bottom with a backup to the bottom, which is called an LPS. I use the word backup a lot, but it's really like an LPS. Can go lower. It can go into a spring action here. That's a possibility as well. So could this be a really dramatic version of this where it's going to go down and hit, you know, essentially like it's pinpointing right here, right? You can see it pretty clearly. Is it going to be this really dramatic version of this where it comes down and hits this gap fill, and you know, we're seeing this as a kind of a slanted version of this? It's possible. It is. You could have that buy up and then see it rip back the other way. But at this point, look how high this is set up. You know, typically if this is going to slide really low, one example is like when you look back at March, you know what I mean? If it's going to slide really low and have a super low terminal shakeout kind of deal, usually this sets up in a way that gives you a build out for later. So let me put it this way. I'm going to redraw this. So I'm going to draw this in like 3 parts, right? So there's the entry, which is just whatever it is, however low it goes. This can sometimes be a determining factor in strength, depending on how this original bottom sets up. But right now, I'm not going to like really address that. I'm just going to look at these second parts. So usually if it's going to have like a spring action, this area right here sets up in a way that the future action over on the right side makes sense of it. So like you would have this set up in a way that the advancements later, hang on a second, let me get the other tool. I'm trying to like give you some encouragement here. You'd have this set up in a way that this is going to be really low, and you would see how that could play out at a lower target, because what they've done is they've left like a huge, for example, before this move happens, you might be looking at this saying, I didn't mean to do that. You might be looking at this saying, well, where is this creek setting up? And if you're looking at it and it's like, well, it's setting up to where it's going to be, if this drops, it's going to be really low. This would give me a sense that it's probably, I know I have it just drawn as a flat. Obviously, there's two up thrusts here, but like this gives you the sense that, oh crap, it could drop really low, and then you have all this room, and you'd ultimately cross the creek lower, maybe as you're coming across the previous bottom even, and that's kind of like a spring action. Do you see that? So you see how it almost always does this, by the way, and I know I feel like I'm like starting to gather a lot of really good data points. I need to figure out a way to like put them all together in one thing. If I could do a whole bunch of talking about this stuff. But this usually sets up in a way that, again, like later on, it makes perfect sense. Like you're going to have a lower cross. It looks like a spring with a test, and then an advancement over the creek, downward creek, right? This is like your main one. Okay, that's one that in most Wyckoff schematics, it says this is your creek jump. They're just really looking for that. And then you go into a potential SOS phase. Now a distribution can have a shallow beginning. So it can have one that sets up really high. And this is kind of what I'm getting at right now. There's two options here, essentially. Like there's oftentimes, if it sets up high, it could be that you're going to cross really early. You're not actually going to go, because this is so much higher, you're not actually going to go low. And if you did go low, you'd end up being stuck really far down, and there's really very little hope unless you rip of coming back up, because you have so much space here that you're probably just going to explore like the lower range. But sometimes this sets up in a way that you do get that breakdown, but then you get an early advancement. And this is where it's either the LPS or it's the UTAD. So this is the situation that we see sometimes play out, which is you get this higher one, so it ends up crossing it earlier, and as a result, you either get a UTAD, right, where this becomes essentially like the double top if you reject again, or it's a strong buildup. And a lot of this will just depend on levels that you hit coming down and all that jazz. Or this is a strong buildup and you end up with an SOS here that then, advances. And it looks like a little cup and handle almost. And the the two schematics look pretty similar. If you look at a distribution schematic versus a accumulation with an LPS, they look pretty similar because they both have like a shallow phase B. So why am I mentioning that right now? If this is a diamond, like maybe it's not Wyckoff appropriate, maybe it doesn't matter. Well, that low target is apparent, right? So we can do the same thing. We can do those two build outs. And AMC is sitting at 508. I'm kind of waiting to see where we close on the hour. We're above 5, which is fine. But I'm really curious to see how we close the hour. And I'm kind of glad we didn't advance too quickly. I mentioned a minute ago, I didn't want to have a divergence on lower time frames. So I'm actually kind of happy we didn't go higher here right away. We came back a little bit. That's good. But we could do this on GME pretty easily. Like we have the technology. No, we can do it pretty easily. So there's actually a couple levels here that make it fairly simple to chart out. So one we've already got on here, which is this guy. This is basically like if you were looking at this like a head and shoulder, this would be kind of like your shoulder level. But it's currently where we found some upper support. The second one, and I'm going to get rid of this. It's kind of in the way. The second one is the selling climax, like the bottom. Now we hit a selling climax over here, clearly with volume, and it actually looks kind of like where we are right now, even before this little second dip. Some folks would say it's a selling climax with an auto reaction that then goes lower, which could be a sign of weakness, but I don't really think that that's always set in stone. AMC's had times where the second low doesn't really act like what we think it would act like, and then it ends up building out like a whole new range. So it's almost like all of this action is a single selling climax on the left side here. It's just one of those things that I feel is it's kind of debatable, and I've been wrong about that enough at this point to kind of be like, yeah, I don't feel comfortable saying that that's not the selling climax, even though it doesn't have the highest volume. I get it. I get why you would say that. I'm cautioning myself is really what I'm doing right now, because yeah, AMC's done that a lot, and there's plenty of examples. We don't need to go back through them all, but you can go back to like the last two or three drop downs, and they're almost all the same. You have like a high volume sell off, bounce, and then you go a little lower, and then there's often a push up that's higher and that recovers. So anywho, we've got a creek here that we can use. I'm going to get rid of this. I'm not going to get rid of it. I'm just going to lighten it up so it's not so obvious on the chart. So AMC is sitting at 507. Still doing okay. I'm not looking at it close up, so there could be something going on close up, but I'm going to be working on GME for a minute since it's actually a little bit more, I don't know, interesting, I guess. More in peril, I suppose. More in danger of downside, maybe, at this point. AMC's at 511, so we're retesting that level again. I'm really curious to see how this candle closes. The volume's kind of been sucked dry here, but I mentioned that that's probably okay as long as you get a buy up after. So it was about, I don't know, 20, 30 minutes ago. I was talking about it. I said, when you get to that peak on that buy up, you're going to have high volume. You want a low volume sell down, a low volume buy back up. And then once you get up here, once it settles, then you want, so like this motion, right? Then you want the high volume pickup again. So anywho. So for example, we can do this kind of setup and build out pretty easily. So there's a trend here that you would watch. I'm going to use the one that has the most touches. It actually looks like it's a parallel. 39, 39. Yeah, it's basically a parallel to that larger one. It does kind of present itself like a large, almost hook-like action, but because it's all running up against that trend from down low. I digress. So I'm going to get rid of these two for now. I think those are kind of obvious, hopefully, for y'all at this point. Pretty sure you understand what I mean when I say it comes back up and rejects, or it goes up and finds support. So in the event that this were to have a shallow bottom here, this actually already made a new low. So yeah, so it may not make another low again. I mean, it could have one more kind of dip before it advances, but essentially, like, you would expect that this would have some kind of spring action if it stays low, like a really minor spring action. It already went below that initial support. So I know it's confusing because I'm drawing so many lines again, but there's a micro range here at this point. So you've got like two markers. They're really close together. One is this initial touch here on this low, which is 205, and then we've got another touch right now at 1996. It's a very minor one, so maybe this action's not completed. There could still be more downside. What we would look for in that is a shorter term reversal. So I would go back, I would get close up and I'd look at this trend and I'd see if, Yeah, so shorter term, it did hit a bottom here, but then I'll see if it finds, this is not, I'm not going to do this because it's really small. Then you'd see if it finds a support here at like 205 basically, or does it crash through? Because if it crashes through, it's like what we talked about earlier. You can have like a buying climax and then it could still advance down a little bit. We also don't know for a fact that it's not going to just break down. So we have to kind of keep in mind that there's a current trend that could be retested and make a new low. You know, if it drops straight down right now, it'd probably make a new low. So I might have to move that number, but for now, I'll just keep it. So yeah, locally, let's do this right. Yeah, let's just grab it. I'm going to measure it to the wicks. I think these top two are really tight. So I'm going to do that. So here, this is a different setup. This is definitely like a second ear top. It's very flat. Usually have about 4 up thrusts, 1, 2 major ones, and after it pulls back, there's 2 more. Really, in my own analysis, what I'm seeing there is that double M that's forming a larger one, right? So that's apparent. That's obviously got its own creek and all that jazz. We can go into that, I guess, too, but that's more locally drawn out. That wouldn't be something that you'd use on the big picture necessarily. It's really small. Anyways, so we've got this trend. If it were to find support here in advance, it's got quite a ways to go. It really does. It really could take all week if it did do that. Anyways, I guess my expectations should just be clearly spelled out, and then we can move on from this. I don't really want to waste too much time. So I don't know where exactly the floor is just yet. Maybe it's in, maybe it's not. It looks close, but it could be a little lower. So if this is to stay high, then my expectation would be that at this point, you would not come back below, in theory, 2005, for example. And I'm assuming that we've already hit a low. I don't know for a fact that we have. So we might actually come down lower. So if that happens, okay, the numbers change a bit, but 2005 would still be where I would expect to kind of see that advancement occur. And frankly, at that point, it's really going to probably look like this, like sort of a parabolic kind of ramp. It's usually what we see. And then if it were to continue to advance, it'd have to jump above this guy, right? And that's where the rubber meets the road, so to speak, in terms of like determining factors, because we don't know, first of all, that it's even hit a bottom, but second of all, if it did advance, you know, does it do it into Friday? Do you get a pump up into Friday? Does it advance above this creek? Does it stay below this creek? Those are big questions you'd have to wait and see, because yeah, I mean, at that point, you're really watching to see if it's a distributive action. This still could present itself like a gigantic double top. So then you've got the possibility of rejection here. You wait and see if there's a buyback up, and then it would, if it's going to go, it would advance above the top and just take off. So this is the only way I could see kind of a build out that's more positive for GME based on the current price action. I don't see a low spring as very likely. So let's see if I'm right about this distance. I'm kind of curious here. I'm really close. So that cat ear is kind of interesting because it might be, we talk about waveforms a lot. That second cat ear, which I know there's other people that trade it, and the guy, what's his name? Real Gains. He does the box top method or whatever. They're both, where he's right. They're it's a delineation of a very important level. Usually it's that cross. Okay, I've always called it different things, and both of us analyzed it in our own time in different ways. So I did not steal it from him. I'm pretty sure I hit it before he did, but I don't want to get into that. So anywho, this is what I'm imagining right now, is if that's the low, this is like a 50% cross. So this would be like your wave up wave down, and then this would be like a cross section. So it actually looks pretty much correct the way I've drawn it out. And this would probably come back up to near the top, almost exactly. So if it were to go this way, this is what I would expect. And then I would expect it to come back to center liquidity again. So this essentially becomes a much larger diamond. Like, this is not the actual diamond. The diamond was actually much larger. Haha, it was bigger the whole time. Like that. And everybody's like, what? But it happens. I mean, sometimes it works out and you think the first structure is right and it ends up being a bear trap, and then it's like, oh, the fuller structure wasn't done yet. You know, it's definitely a possibility. Especially if we see something like this where it comes high or something weird and it continues to narrow. It's certainly a possibility that this was a incomplete diamond structure, you know. So this is anyways what I would generally expect if you see that buy up. And yes, I do think at that point you'd head back up towards the higher gap here, which also looks like a pretty comparable price target. I mean, they're both kind of targeting gaps above and below at this point. So yeah, that's what I would expect in that particular build out. The weird thing about this one is, again, like, it didn't really set up where this is low at all. I mean, none of these are particularly low except for this. So this is the only one I can see that might present itself later. So if we were to drop, I'm going to go back and look at AMC's at 503. I'm going to check out AMC in a minute. So let's say in theory that this comes up and it hooks or whatever, or it just doesn't even hook, it just fails right now, and it regardless of what happens, it just breaks down, okay? Really, this target is behind us already. I feel like it's already in the past almost, or it's like nearly in the past. This looks like today in like 2 hours, so it would have to be a really fast move, and I just don't see that, but I mean, I guess you never know. Like, it doesn't look like it's built out to do that right now. Let me see. I don't want to speak out of term here, but maybe. I think we'd have to see it start going low like soon. You'd have to see something like this where like it drops down and then it hooks and then it would just drop. That's the only way I can see this kind of playing out that way to this timing anyways, if that's where the intersection is, like 11:30 today. Obviously that's going to really wreck stuff here, but this is a 6 minute, so AMC's at 495, so it's back down. That candle didn't end very well. It ended as like an indifference candle. So it could indicate we're going to see some sideways here. So basically, both of these two candles today, well, I guess that was yesterday. They're both sort of like a, how would you just, I say indifference candle, but it's, when you see like tall wicks on top and bottom, it's very like minute, you know, like if that body of the candle is slightly lower, you might be in for a little bit of a pullback. If it's slightly higher, it may be more like a sideways action, but I mean, you can go back and analyze them and you can see like sometimes slightly higher action, slightly lower action. It looks like a lot like what we saw, frankly, like Tuesday. Like there's a stronger candle here back to 482, but it's finding a little bit of weakness now. Didn't hold that 497. Could be a double back up to this creek, which has so far been pretty useful. What I'm going to do is, and it's just again a support level right here. What I'm going to do is go a little closer in. We'll go to 15. I don't see anything really wrong with this just yet. I mean, sellers are pushing it down, but they're not, the volume is pretty light. So far it's not done anything super extreme. It is a double top in some ways, but it didn't make a higher high here, which is actually probably for the best. So Well, all you have now is you have an advancement with a return back to support, and then you're advancing again. The volume's very light. There's not a buy-in, but so is selling volume, and you didn't create any kind of divergence in volume and price. It's just kind of there. That's what really RSI can help show you. And I mean, I'm looking at the volume and price and the RSI. They're all kind of in tandem. So there's nothing really dastardly about this. Let's see. On the 6 minute, I'm going to look at short term, what's going on. It's a little jumbled because of all my little lines here, but I can use these as like trends, I guess. So, yeah. Yeah, it seems like there's a cross right here that's fairly low. I want it to hold above 497 next, but right now we're just sort of chopping along 497. It's sort of like a center mark, so whatever. I don't think we need a double bottom per se, but by the looks of it, it looks like we might go for it because this is very, very low. So, we pretty rarely see like a traditional SOS on AMC. I hate that for us, but we almost never see it. Like a traditional SOS pushes resistance, and then it kind of chops along the top and often looks like a wedge. Volume dries out, gets shallow, and then it takes off at the end. There's so few examples of this except for that big run up in June. I mean, they're almost never like perfect in shape is what I'm trying to say. And then unfortunately, AMC has a tendency to also break down after these kinds of patterns. So it's a very difficult one to kind of at a glance like assume anything. It's basically the same pattern. So I don't know. We'll see. I'd love for it to hold here and not go back below like 490. That'd be really nice. So I can do that. That'd be a little stronger to kind of keep above 490, I think. I'm just thinking. Yeah. Higher lows would be better still. It doesn't matter. I mean, at this point, we've tested liquidity so much at 484 that I guess at this point it wouldn't really surprise me if we did some kind of like deep spring action here, like locally. I'm talking about this really tiny top. That really probably wouldn't surprise me that much, just based on everything we've seen. I'd be like, okay, whatever, All right, so back to this GME thing. Yeah, maybe. Sure. It looks like it's trying to push low again. We were talking about, potentially holding this like 2005 and it's like sliding. So we'll see what happens. It's not a one size fits all kind of thing. Like there's a lot of different situations that could play out here. I draw it out like this because I like to visualize what it might look like, but there's nothing in the world of TA that says you should be able to predict exactly what something looks like. It's more about, for me, the angles. So anyways, we're working on this lower option. So if that were to happen, let's see, are these two the same? Roughly 18 degrees. Let's check here. Well, that was wrong. Grabbed the wrong one. I don't think so. I think it's steeper. Okay. Well. Hard to say. I think it's kind of similar to what we saw before. Like, they could tease out a gap and try to drive the price into it. I'm not sure it's going to get there all the way. I keep talking about how it's like a feeling, but it's also just watching the price and how elevated it is. There's still a lot of buyers in GME, so I don't think it's black and white. So I'm talking about this like it could be a spring action, but really this isn't, it's not that straightforward, I guess, as I'm trying to say. Like, this could work out in a number of ways that still gives you like a spring later, and you could end up not seeing an advancement. This is the way I would see it if it's going to advance after the gap fill, is that we might go low now. Maybe we make a new low and just kind of push down again, and then we get kind of stuck here, and then fall into like Friday or Tuesday, and then Tuesday, I don't know, one of the two, you kind of take off somewhere around that time period. That could work as a spring, because then on the big picture, this would have been like a failed area where it was distributive, but then on the larger range, you could still have so like this smaller upper range here, this little top, if it fails and it becomes distributive, it doesn't mean that you have to go all the way down to the gap right away. That's not what that means, because it's part of a larger setup. So there's still a decent chance that you could run down and catch somewhere around 18.9, and then it'd be working out a much larger range, right? So then you could still have like a lot of movement. It's kind of interesting to think about them as parts of wholes, right? So it's like this is a small range up here on this little top right above 2005. But then if you look at the big picture, technically it could build out pretty simply. Like, it could definitely build out a larger range going into Friday, and maybe even gap down or something on Tuesday, and then just run breakout. I could see that as well. So maybe one of the worst case scenarios here, I guess, I know this is like a breakdown and most people will be like really annoyed and frustrated. There's still a lot that has to be kind of proven about it. We're not there yet. We're really waiting to see how this little micro reacts right around 2005, which is where we're sitting at 2003. Like, we don't really know. If it makes a significant new low and doesn't come back above 2005, you might be in a larger, back into the larger range, and just kind of forget the small one for now. But if the small one can manage to hold on to some support here, even if it makes a new low, if it reacts back up, so right now it's dipping down to like 1990, right? So it's dropping through. But even if that were to happen, if it quickly reacts back to the upside and finds support today, you would just be in for, I think, another potential advancement. It's a mixed bag for sure. I can see it working either way, like, and being successful at achieving whatever they want to achieve. I think one of the worst scenarios here would be, in my opinion, would be kind of like losing this top, where you come up, maybe run up into Tuesday, and then actually reverse. So for example, let's say that AMC, this is just again a theory. Let's say you get some more chop to the upside, AMC breaks out, and it's ready to go. Well, Tuesday, let's say GME does something similar, and then Tuesday you get like a rip to the upside. GME or AMC, for example, it's just a theory, just a hypothetical, okay? That makes some sense to me. If AMC at that time advances pretty far, if GME hasn't already made the SOS, it could just be like this move, right? And then you could still technically be at risk of seeing this kind of break down and come into like a distributive action, at which point you could be coming like really low, and that's sort of the bigger maybe danger is like these moves, they might actually move in sync, but not achieve the same goals, which is often what happens, I guess. That's what I was saying. It's kind of baloney to say they have to move together. They don't really have to. Like, you can have them move sort of in sync with each other and have the ups and downs be moving kind of together, but not actually achieve the same goals, which clearly is the case at the moment. You're not quite in the same spot. They both had ups and downs that were in similar places, but they didn't have, the same results. So, anywho, I know that's a lot, and you guys are saying, well, obviously, if you say a million things, something's going to stick. Well, I really haven't been able to analyze this part because this hasn't happened. So what I'm doing is a build out that makes some sense to me. The way this thing is structured deep like this, it would have to move within the next hour really hard to get to this intersection. It just doesn't seem, I don't know, it doesn't seem as likely to me, but that is the last kind of scenario, and I'm not really talking about that right now. I'm kind of just looking at more simple stuff. That would be a really deep move. It could be a terminal shakeout. So terminal shakeouts where you have a really deep spring really rapidly, and then it's like a V-shaped recovery. It's very, very fast. And those usually result in like pretty massive moves. So it would be like something like this if it were like a terminal shakeout. I don't think that's as likely. Really don't see those very often in the market. And I might be more inclined to think that if it went down and filled that gap, and we'll see here, hang on. Yeah, that we'd probably trade down here a little bit. We wouldn't just like immediately recover. But there is a situation where that happens, so that's an easier one to kind of read because usually you have a very rapid advancement afterwards. It would be like a huge volume influx, very violent. That would be one of the easiest ones for us to see happening because it would be obvious. These other ones have a lot more chop, makes them really boring to watch, a little harder to interpret because you'd have to watch the volume on these advances and or declines, There's a lot more to it. So anyways, my thought was we might see a new low and then bounce here, and we'll see whether it holds. I think if it can hold here, we might be in for this kind of middle scenario. But GME's kind of entered a stage of fuzziness. So we're going to just kind of wait on it. I mean, AMC is looking good. I hate to knock on wood, I guess. I'm just going to do that because I'm not superstitious, but I might as well. All my books fell off. I work next to like a huge stack of books. This is my reading list. None of them are interesting books, by the way. They're all like guides and junk. We don't want to fall below 468. Right. That's kind of where this creek level is here. It might be like a 50% retracement or something, right? I don't know. 786, I don't know, 618. There's a lot of reasons you don't want to come back beneath here again. These levels, it's kind of what I drew out earlier in the stream. It's a it's a possibility that this ends up forming something bigger. Like I was mentioning a minute ago on GME, I didn't really give AMC that option because I'm looking at AMC on the 6-minute, and in theory, this is where I want to see it hold support right here. I want to see the rapid action around 497 and then an advancement. But, you know, there's always the possibility that we see a larger range build out. This is like a top, and then there's a bigger range that fills out, maybe around 482. I'd prefer not to. At this point, like, just give me the simple exit, please. You know, like I'm already like annoyed by that 480 level. I really don't want to chop around it anymore. I'd much rather that be just a support now and just leave it alone. But yeah, I mean, in theory, this should just hold and advance if it's strong. I think in the case of like going into a Friday where maybe your max pain's at 450, sure. Like if all I have to do is click off this time frame and look at a higher time frame, and you could see how, sure, that could be like a top that then wraps around, you know, and waste a whole bunch of time till Friday. None of this seems outlandish to me. I mean, it seems like this is very likely, and you could end the week at like 499 or something silly, you know. Like, of course that could happen, and that's just sort of the nature of the market. We might be thinking this is it. This is the big move, you know, because it's gotten where we wanted to go. Yeah, and in an ideal world, that happens. When the stocks are really bullish and they're making those moves, this is exactly what you see. You can go back and look at those big run-ups in the after hours. You know, that's what you see. You see an advancement, you see a consolidation, an advancement, consolidation, and then it advances. I mean, but in reality, like when we're exiting a range like this, it can be really messy and it can be really boring. And for AMC, it tends to be, I don't know, a mixed bag. I don't know why exactly this stock is like that. Maybe they just have the operator just really likes to shake out, and maybe they have a lot of success in that, so that they just keep doing it. You know, there's an algorithm behind everything. There's obviously going to be you talked about the quantum computers. I don't want to get too heady or anything, but they're analyzing all that liquidity data constantly. So if it's effective, that might be why we see that kind of stuff happen all the time on AMC. You know, seem like it's going to advance, and then there's this really deep, boring backup, and then, you know what I mean? Like, it's just kind of the way it's been running. So this kind of nonsense right here would not surprise me one bit. Just would not, you know. And I think a lot of this is going to be based on what you think about who the operator is, what their goal might be going into next week. What do you think of how do you think that the market maker plays a role or doesn't play a role in this? There's a lot of thoughts that you could have, you know. We need AMC. There's nothing to talk about with AMC if it's just going sideways and consolidating around 498. You have to wait until there's something interesting happening. I'm always looking at the prices. I always keep them, even here, like I can see the price of AMC on the right side of the screen. So I'm always kind of keeping my eye on the price. It might seem like I'm some kind of I don't know, like I'm a crazy person or something, but I have, in my mind, I'm like mapping it. I know it sounds really weird, but like I kind of already know where the high and the low were. So in my mind, like I'm thinking about the current trends and like what's going on. And obviously if it's been downtrending to a particular point, you can kind of map it in your head. You don't always have to like stare at the price. Like I'm well aware that if I said it over here, I'd rather it not make a higher high, and then it didn't. So then what would you expect to have happen, you know? Well, once it breaks out of that trend, so once it drops, 10 cents, it's probably out of that trend. And then you're just kind of waiting to see where it finds support. So I've been watching it gather some support around 497. I don't think it looks like bad or anything. It's got low volume. The creek's one of those things where it's like, it's a trend at this point on the top, and you've got a pretty humongous amount of distance that you could travel here. So yeah, until it comes back above like 515 or something, this previous top, there's not really much to say or worry about. I don't know. That may sound a little bit silly to some, like, I don't know if I wanted to do that, but I guess that's fine. I'll leave it there. I just don't feel the need to like stare at the 1 minute or something. Some people do that. I know, we want to see something cool happen. Yesterday, we waited a whole day, and then as soon as I got off the stream, I don't know how many minutes later, 20 minutes later, something finally happened. I'm not going to wait around all day if we're chopping and stuff. If cool stuff happens and it's really, really important and dramatic, I might get back on, but it just depends. Like, I don't feel like the need to come back just because something's going crazy all the time. I think there's a desire to have answers right away. We want to have answers right away, but like, it was easy enough for me to just wait till the day finished because I wanted to see if it held, and then it held, and then I was like, okay, I'll just do a video now. That's better. Sure. We're on the 2 hour over here. I can move back to the daily and then go to the current time frame. This is my, I don't know if it's a cleaner chart, but this is my simpler chart usually. Pretty straightforward. I'm going to get rid of these old diagrams. I think we're done with those for now. I always say that, and then I end up regretting deleting stuff, but 463 was that early support we needed down here. Looks like we got over 460, but still there. You know, someone mentioned earlier 464. I think that's still like that level. You can see right here there's little gaps right around 464. So it's still a really important level. So on the daily, it looks like we moved above our moving average. RSI is doing weird stuff on the daily here. It does look a lot like a little cat ear, but I mean, if it's a bottom, it's gonna look like an M too. It's gonna have a little M shape, so too early to tell maybe. So yeah, that advancement here yesterday, Wednesday, was a big deal. That candle basically ate the previous candle. Just complete cannibalism, just ate it on the whole body of that candle basically. And then as a result, we've pushed back above that trend that I said was really important. You may not agree with me, but I think it's pretty important. There's a couple of them, and this is one of the ones that I think is pretty significant. We've tested the long-term downtrend quite a bit, and now it looks like we're sitting right above the hourly. And that should be, not hourly, that should be the daily 90? Yeah, I think it's the 90. So that would be the 4 hour. So right now that's at 485. So it might be good for us to mark that off, but I think that's already marked off. So that's 482. Hey Kyle, no, I don't use it. I don't use it. I'm done with social media in that way. So not my thing. Sorry. I know that a lot of people like it because it's fast. You can get quick updates, but it was like draining to me, and I found myself finding myself in dramatic situations as well. And yeah, sometimes I can have a pretty abrasive personality, and social media just doesn't do me well. So I just don't have any desire. Once I got off, it was like this huge like relief on my brain, you know. It's not what you think. It's not like trolls or something. It'd be like all these other interactions that I deemed with people that I liked or that I respected that I don't know, I would just like sit there and like dwell on it and think about it when I don't need to think of that crap. Like I got way more important things to think about in life. And I get why some people would be like, well, why don't you just not think about it? And I would just say, well, why don't you just make $1 million? And you'd say, I can't do that. I'd say, why? I say, because I just can't. Can't just magically make $1 million. I'd just say, yeah. I can't just magically change the way my brain works, you know. I'm working on it, but that's just not how my brain works. Like I'm stupid, analytical, and it's a good thing and a bad thing. I will sit there in my free time and think about every single thing. I know. It's part of the reason why I like art a lot and why I like martial arts. Both are really good for me because they take my brain off of everything. Like I could basically just dial into something that I'm doing that I enjoy doing, and then I don't think about everything else. I have a very overactive brain. I'm probably going to die young. My brain is going too fast. It's like wearing me out too fast. Yeah. Yeah. Yep. Don't take life too seriously. Just look at the stars. Yep. You just gotta. I find that I'm actually happiest when I'm like. I mean, it really is. It's just the truth. I think a lot of, and we all have different beliefs about different things. I'm not gonna peddle any beliefs on anybody here, but that's not what this is about. But I think there's a lot of truth in just living simply. Like simplicity tends to be the thing that brings me the most joy. Like if I can do work that I enjoy doing and keep it simple and not have, not take yourself too seriously, really. Not take myself too seriously, just do the work, and I tend to be happier. Usually I end up not being as happy when I'm taking it way too seriously. And there's nothing wrong with being serious about serious things. I think that's a fine line, but most of you guys are probably my age or older. I think some of y'all that come in and listen might be a little younger. I've got my share of big regrets in life, but one thing I wish I had done better was learn how to manage my stress at like a younger age. I think that would have been really helpful for me. So I'm learning how to do that better as I get older. It's been a long journey, more of like a marathon, but I really wish I had taken care of some of that stuff early on in life. Because stress management when you're young is usually not very healthy. It's like, oh, if you're in college or something, you're like, oh, I'm late for a project. You just stay up all night. That's what I would do. And you take that into adulthood and it doesn't work. Or I'm stressed out, I'm just going to go play video games. Those are all things you do when you're young. And those escapes are fine, but escapes don't really change much. They just let you kind of have relief for a bit. So I'm learning that like specifically like martial arts has been super helpful for me. because it allows me to like center my thoughts on something else, but then I don't know what it is, but I can kind of like see things a lot more clearly when my body is like exhausting as it's going along, and everything just kind of becomes simpler. So it's one way. There's other ways to manage stress. I can't give you financial advice here, but I could tell you if you're younger, definitely take time and develop good stress management skills, because you're going to need it, especially if you want to have like the whole package life, you know, like kids and married and good job and all this other stuff. Like you're going to have a lot on your plate, and then tragedy is going to strike and things are going to go crazy. And you're going to be like, how do I manage life when you've got a million responsibilities and things go bad? You know what I mean? Because it's going to happen. That's just life. Anyways, that's the only advice I would give you about that. Yeah, okay. It looks like we're creating these like parallel moves down. I'm thinking we broke out here like temporarily. I'm going to wait and see if we advance past 505. It's a really small range. There's not really much to say here worth saying. It looks like we made a higher low around 493. It's really tiny. So again, like just be aware that these kinds of things can be misleading. It actually looks like it's coming back to check it, and we may or may not hold it. I'm looking at this as like not a double top, but I think it is. Hold on. 505, 505. Okay. All right. Well, so it didn't push against that resistance there, and you can see that was a level previously when we came down. We came down from 505. It was like almost like a flipping cliff. It looks super flat. It's like a plank. So yeah, we need to get back over 505. Just locally. It's a small little goal towards a bigger goal. So I would say that was a attempted creek jump, but it got rejected at 505. So it moved up higher. It pushed out of what we would call like the downtrend here. And if I go to like the more accelerated downtrend using the last wicks, you can see that move down that we just had to 498 on AMC was a yeah, when you join a stream, I don't know what it is. Sometimes I don't even know. Actually, sometimes it just does that. I've been on streams before where I've been listening and I'm like, I look down at the bottom and I'm like, holy crap, I'm like 30 minutes behind. What am I doing, you know? Why did it do that? I don't know. Maybe like accidentally pause it or it loads at a weird place. I don't know. So like this right here, this 498 hit was, I think, a backup to the creek jump that we just made. At this point, it did not advance past 505, which would have been perceived as the top. So really we've made kind of a double top here. So 505 is going to be a level to beat for sure. Today, I think that it looks like it's pretty strong at the moment. I wouldn't, yeah, it's the same level we kind of dropped off at earlier today. First thing. It was over about an hour ago. Okay, yeah, it's becoming pretty important in this range, so we'll keep 505 on the screen for now. That's this level. I'm gonna caution here because you know this could be a bottom, could be an LSPY kind of deal where it's like a bear flag. It's not a big one; it's a small one, so it probably wouldn't result in anything too crazy. But I could see this being a way for somebody to try to get back down to, as like a 50% point. I always think about S-curves because they're everywhere in the market. Anytime you see the volume like evaporate, it's either you're bottoming or you're going to have a continuation right after that. So there's always going to be some kind of a decent reaction to volume being dried out. So this is, to me, potentially where we would go is like 483 again. So it's got the markers there. So if I would say like at this point, we cannot manage to maintain this region maybe around 497, we might expect to see it kind of tank through and try to continue back down to 483 again. You know, these levels are just painful. Back and forth, back and forth. So your daily candle right now is turned red, obviously because we're below where we opened. But there's I don't know, it keeps flipping back and forth. I don't know why it's doing that. It shouldn't be that color if it's... Where did we open at? Hang on. Oh, it opened right at 5. Oh, that's right, because we opened on a gap down. That's right. I think that's right. So it makes sense. The candle's not set to the previous close. It's set to the opening price. So technically, we could be red and have like a green candle if we dropped low or something. Anywho, yeah, right now it looks like a flippin'... just a wick. Like we're right at 5. So, yeah, I don't know. I mean, we need to find support here. It's starting to look a lot like what I drew, which is fine. I wasn't expecting it to be that clean. And it's mainly the reason I drew it here is because there's that trend. So what happened last time is after we got that push above 482, this was back on Tuesday, we slid back down to that main uptrend. So in order for this to kind of prove, again, more strength, we really want to hold that uptrend, which is why I put the drawing here, this little green doodad. That's why I put it right on that marker. So it wasn't like, again, it's always like, it's not an inevitability that it happens that way. It's just, if it were to happen that way, I would be like, oh, that's good. You know what I mean? Because it held that with some strength. That means that bulls put their foot down and said, no, we're not going to go back down. We're going to maintain this support level and advance. And if sellers can get their way, they probably would drop it. This is kind of what I have here in this sort of middle scenario that goes low. Sellers would probably drop it and try to keep the price pinned at least as low as they can, maybe down to that 460 level into the end of the week. No telling exactly how that would play out exactly, but I think that this is pretty much what I would expect. I know I've got all of these coming back down, but it's just me being kind of cautious about stuff like Max Payne and stuff. Really, like, if you got up to 550, you might say, well, why don't we just finish at 550? You know, why would you even come back down? Why would go back through that again? It's just the way it's been trading. Like, we've traded across this level at this point, so it wouldn't surprise me if during this advancement we tried to come back down to 5 by the end of the week. But at the same time, it's like, sure. I mean, if this is already accelerating into the end of the week, I could see how it may not do that. I could see it being a little more parabolic in the end. So if you look at this structure, it's kind of like, you can see how that could start curving up in a more parabolic way as it gains support. And we may end up with something more like 549, you know what I mean? Like that. And that would also not be incredibly unusual, I would say, going into Tuesday. I could see it. So I know I've been very, very cautious this week to not overspeak on any particular move and to let you have room to speculate. In my mind, I always have what's just happened in the back of my head. So I'm always thinking, like, was the last move a good move? If it wasn't a good move, like wasn't a good move into Wednesday, that Tuesday downward motion, if it's not a great move, then what has to happen in order for that to turn? And sometimes that's a really steep ask. Like, I would have said that in order for this to turn, you have to have some massive move back up here, and that's what happened. But it happened in such a way that it ends on a whimper, and that's often what happens in a smaller accumulation like this bottom one. Is it's really weak, and then all of a sudden it just goes, and that's pretty normal. So, it's always going to be like this really dramatic move that has to kind of correct it if you think that it's a bear trap, and that's what happened. But I'm not going to sit here and say like this is a bear trap when I'm not 100% sure, and I feel like there are times where I've said that and I've been right. There's other times where I'm like expecting a fake out and it doesn't fake out, so it just follows through. So I've been very careful to kind of leave the doors open this week. But I want you to know, like, from this time last week, going into Thursday when we first came down here to where we are now, we've kind of made a complete U-turn at this point. It's still necessary to say this out loud, that I am overall like pretty happy with the way this built out, but I think that we still have to make sure that we maintain support, and that's sort of the thing that always, I wouldn't say it gets you, but that's the thing that a lot of traders, when they're looking at this kind of stuff, they're only looking at breakouts. It's kind of a newbie. I don't want to say you're a noob if you do this, but just be mindful that the breakout's not enough. Like, you want to break out, you want to typically close above whatever support it is that shows some strength. Then you want to maintain that support. And if this were an SOS, for example, how would you trade it? Would you buy in as soon as you see the SOS? No. And this is where people are like, well, when the heck do you actually buy, Booksy? Because you're always talking about this and that. Well, I mentioned it again, kind of first thing this morning, is like the first move up into the SOS is usually really strong. If the SOS is successful, you're going to trade across the top of the range, and you're going to kind of test out that resistance area. This has still got to work itself out as a range. So it could technically still have, a dip down to 482 again. It could be a double bottom, or you could have a little spring action or whatever. Like, it's still a range. So that's really the buy-in point. It's like there should have been a push up, which is what happened. And then you say, well, I'm looking for a lighter volume push back up above resistance. That happened. Then I'm looking for support to build. If support builds on pretty weak volume here and it looks good, then I'm waiting for that advancement. That's really the moment of, typically, like, we talk about smart money buy-in, and this is me learning from like Stockfather. Like, this is where most of your institutions play. They play on these moves up. They do trade shares here and there. They obviously are constantly manipulating price action, but a lot of times it's like right here. Like, this is where the markup's actually starting. So they're not interested in the same things that retail is interested in. What they're looking for is this final kind of move, the confirmation move out. So it's like confirmation on top of confirmation. Like, you're looking for the breakout of the breakout. You know what I mean? That's really the best place. So, and even then, there's a danger of getting in too early if you have a big advancement and it comes back down. You know what I mean? Like, you might see that could really shake out some folks. It happens. I usually start looking at the previous highs, and so I'm looking at, all right, right here, you've got like a 511 area. That seems logical that it might break out near there at some point. It doesn't have to be right now, but it could be like right around here. That makes sense because that's one of the ceilings that you were looking at. So maybe once it gets over there and finds some support, it's out of this wedge. It's now out of the top. That phase B top, it's above it. It looks good. That would be a decent place to assume upside. And then, you watch the creeks for pullbacks. And then, of course, you're watching the next tops, which are like 522. It's not all hands off, but at that point, a lot of folks are going to say, well, you've missed half the move. Why didn't you buy in way down here? Well, first of all, I wasn't like not buying. So I know that a lot of you think that I was really down on it. I bought calls this week. Like I bought plenty of calls on these dips. Because my larger big picture still was, I'm not really sure. So I have a hedge position, which is a shorter term put position. I've got shares that I haven't touched. I'm not doing really much with the shares, but I ended up re-entering my leaps on these lower lows down here. And they've gotten thrashed about a bit. They're not super positive. Like some of the cheaper ones went positive today and yesterday afternoon. But a lot of them are just kind of sitting still. So like volatility shakeouts like this often mean that you really don't get a better entry buying these bottoms than you do these breakouts. You might think that you're going to miss out on a lot. You might miss out on that initial move. But at the end of the day, like when you look at the prices between buying like here, for example, and here, it's usually cheaper, to be honest. Unless you're trading like a swing trader and you're buying and selling, buying low, selling high, buying low, selling high, it's pretty unlikely you're going to like catch a bottom and then, you know what I mean, ride it all the way up. So what I'm trying to say is like this, I'm not even kidding, right? Like I bought some down here when we crossed here. And I don't think those are even very green at all, like right here. Like the price hasn't changed that much because there was this magnificent backup, right? So again, you might think that buying low, entering those positions low seems wise, and it does seem wise. And if you're playing like shares, definitely wise. And I think playing shares is a much safer way to play something like a breakout, right? Where this breaks out and jumps across. Yeah, you could play contracts there if you're quick and agile. You can catch that move, but really like it could have been like this where it advanced and then just dropped it all back down, you know, in which case you probably lost, if you didn't sell, you probably lost all potential volatility gains that you had on a contract. So in a share situation, if I bought at 450 and it came back down, I'm probably not hurting very much at all when it gets back to 450. You know, you're not. But if your contract gets thrashed, you might be down like 30% and it's the same price. There's a lot of things that play into options. So I'm just telling you that because I want you to know, like, I am bullish, but I wouldn't say that, like, at the end of the day, it makes a huge difference whether you buy back here versus here. Like, you're not really missing out on much. If you go back and look at contracts as they were, it's kind of interesting. Back in like March, the big March breakout, that's one I talk about a lot. I've analyzed it a lot. And it's really fascinating because the contracts, the last shakeout they did on like March 22nd or whatever it was, the contracts almost reset in price from like the very bottom. Like they were higher for sure. It wasn't like they were way, way, way higher though. They were significantly... They were very, very close together. So I find that to be really interesting. You know, it's the game that institutions play. I don't think they really care that much about the extra few pennies, you know. And it's also part of the reason why I stopped worrying about short-term calls. I know you make more money on them, but they get thrashed a lot in these sideways ranges. So I started just doing leaps. And that makes a lot more sense to me on AMC because this stock is bonkers. It can be going one way and then all of a sudden you get like an upthrust and it's done. And you're like, well, crap. Guess I'm out, you know. And these big volatile moves are dangerous, dangerous, dangerous. A lot of people are selling contracts to eager chasers, people chasing the price. They make a lot of money selling calls during these uncertain times, if you will. Yeah, so I mean, it's not bad. Like I've got one contract that's down about 40%, which is quite a bit. I've got one that's up 5%. I've got a handful that are up 12%, another handful that are up 21%. So altogether, I'm sitting at basically 0% gain thus far, which might seem like a really stupid trade. Like, man, you didn't get good entries. But I knew what I was doing. I was swapping out some things and rolling some things, and I needed to change my position because I exited everything. I told you all I did that. I was just telling you my plan. I exited everything right around 10 when we had this little push back up. As soon as I could get out, I got out on that day because of the 100% gap. I didn't re-enter until more recently, like down here. But the price of the contracts has so greatly diminished. You know, I should have just been patient. So the first ones I got into didn't end up doing very well. And I ended up sort of swapping them out for other things pretty quickly. But then over time, they've been more and more profitable. And then my put positions, they're out a little ways. They're not terrible. They're down a bit. I'm going to keep them. If we take off, I'm going to be getting rid of them, just selling them off. It's a loss, but that's okay because I wanted it. I don't want the loss, but I wanted the hedge. So if it suddenly started dropping down to 3 and I have to exit my other positions, I'm not going to be at a big loss. So, yeah, I'm not playing any options on ChargePoint, just doing shares. I've got shares in NU. I told you guys I bought in at like 11.50 when it pulled back. That stock has not really been doing too much lately. MPW, I'm still in my calls. I got out of a couple of them up here, but I didn't think we'd have as severe of a pullback, and I really wasn't looking at those gaps. So it was really more my fault than anything else. I was waiting to see if we were going to gap fill today. It looks like we hit the top of it. This is a strange little candle. Hit low at 482. So I don't think we gap filled. I think that's a 479 gap. So we may still need to go down again. It doesn't look great. I'd want to see a strong recovery up back above 5 something. That would give me confidence. I don't really like anything else here because if this is like we call it an S curve or we can call it a shallow S curve. If it's a shallow S curve, you should see that strong recovery back up to here because it should come back above the major creek. This is just dipping down to get that gap and then it'll rip back up. If it's not strong, this could just break down, and if it breaks down, I mean, it's going to go pretty low. So I would have been in that situation, it would have just been a bad trade. And yeah, it sucks, but it's got a potential to go down to this lower gap. And that might be just part of the game plan here is to just like reset it. And if that happens, it's got a lot of time. I'd have to really go back and change my analysis on it. Right now, AMC is sitting at 501. Seems like it's holding that creek, but we'll see. I'm not really sure what else to call this. It's sort of a trend / trajectory at this point. If it holds here, I'm going to say it's resumed that trend, not just a creek, because it's had support as a trend would. So that's where I'd be with that. I think we would see a push up. It does look like a little bit of an inverted head and shoulder here. So it's possible that breaks and goes up, but I don't think that target would be much of anything. I think that's it. It's a pretty light target, so I know they're everywhere in the market. They typically do work though. I mean, if you get a good measure on them. So like maybe 36 cents. So from here up, maybe about 36 cents. So this is actually higher than the 547 target. This looks like 563, which I think is a fib level. Let me see here. That sounds familiar. Well, nope, definitely not a fib level. 546 is. That one made sense to me. Yeah, I'm not sure what 563 is, if that broke. maybe from over here, these resistances up here. Sure. Yeah, it's something like that. It looks closer to this right here, this 560, than maybe 563. It doesn't really matter. It's more of like an average target anyways, so yeah. So 2 potential upward targets here. We'll see which one catches if it breaks up. Yeah, it's good trade if this thing can advance. Yeah, it really sucks though. I really think there's a lot of potential for this, but that's the thing about sticking to your trading plan, you know? It's like I had a really good entry on these MPW calls and I just let it go, you know? I let it ride up. It hit basically my target. I thought it would go further. I thought it would push resistance. It didn't push resistance. And so it's really my own error if I didn't make profit on it. Like I just didn't exit. I knew that the target was up here, you know. I think it went a little higher in extended hours, but I had, just like AMC, I had the opportunity to exit before any kind of retracement. So if you hold possibly to your own detriment. That's the name of the game, you know. You might say, well, why not just sell right now and then re-enter? Well, that's what I'm going to do if push comes to shove. So I'm setting a stop right now so that if it continues down, I'm probably just going to get out of the position. I don't really want to like lose more on it at this point. I'll just take the profit that I have. It's a good profit. Shouldn't be unhappy with it. Just move on. Reset. My GME position was another one. I bought in shares and then decided to hold through all that up and downside, and it went to like $80. So I could have made quite a bit of money if I sold my shares, but I didn't. Now I'm all up 11%. But if it goes back down to that 17 level, if it drops here and heads down to that gap, I'm going to be at a loss on my share position. Some people will look at that and say, well, it's an opportunity just to average down, you know. But I don't necessarily think about it like that way in this particular case, because long term that might be beneficial, but the way GME is going makes me think that unless I saw this immediate reversal or like short-term reversal, which is only a few days away, I probably wouldn't be overly bullish based on the dilution, you know. So it becomes a kind of a gamble of like, well, if you think technically it's going to go up, but there's this dilution announcement, it's kind of a weak position to be in. Anyways, I'm just sharing my thoughts with you about my own positions and stuff. We did talk about a couple other ones this morning. We talked about Lucid. Looks like AMC's making a little push up here. I actually talked a little bit about Lucid. If you missed that, I think it's a good buy. Oopsie, I meant to click the symbol. If it can manage to push back out here, but it's got a potential, and I don't know where the chart is that I used earlier. It's on a different chart, but basically it's got a potential move up to like 430. I think it's got some strength there, but it has to, I don't know how to describe this. Like it may have to make a pullback first. And there's not really, I don't have a really strong opinion about where it goes, except maybe to 260 where there's a previous floor. So like, this is still like a decent trade to me. But I do think it's possible this could come back down to 260 again before advancing. And if it does, this could be really positive. But I'm not quite ready to say, yeah, it's a time to go kind of thing. You know, if it advanced back above 294 with some strength, I might be more inclined to like check it out. as a potential buy, because that would signal the probable advancement here. But anyways, I did an analysis on this really early today. If you guys missed it, you want to go check it out. It's like within the first like 15 minutes. The other one that people have been talking about is Barnes & Noble. I think it's a stinker of a chase right now. I don't really like it to chase it. It moved like some 800% already. It's, I'm on the daily. It's gotten to the overbought area. It's traditionally not really been very good for this. It's also, it's a weird one because it rejected right along a previous support. So at this time, it's kind of like, well, do I anticipate it's going to go up and break? And if it does, there's a decent chance it gets back up to 334. But like I'm fairly confident that's where it would go. This is like a widening spread. Like I think it could move all the way up to there, maybe more like 2 something, but as the crow flies. But I think it would ultimately break that and then possibly go back up to 350. That's a big return. If you bought now, you'd see it 300%, but it just bounced off of a previous support level, and it's testing moving averages. So I advise maybe looks like AMC is moving. Got my alert. I'd advise maybe just kind of watching it and just being really careful. That kind of a move could have a really deep retracement before it advances. So it's 35% down today. Really got to wait. So it looks like AMC is trying to push resistance here. So that's good, I suppose. We'll see. That's kind of a weird candle out of nowhere. Okay, so where are you going? Where are you going, AMC? That's a dumb candle is what it is. All right, well, not a big fan of that candle. Didn't make a new high, so it's not a huge deal, but yep. Man, it's loud. I'm gonna turn that down a bit. It's probably because of this break above 505. That was this really hard to beat level. I said it was a dumb candle because I know I'm not trying to be mean. It feels like the steam was let out, like we had this pressure build up and then it broke. But really, like, if you look at the advancement here, it's a kind of a silly advancement. There's no support that was built. It just kind of took off. This is a 1 minute chart, but it's important because that means that on a pullback, you could come pretty low. I don't know what I'm saying. I try to be critical of everything. It really is not that big of a deal. But I could think of this coming back down to 502 still. I'm happy that it held here. That's good. So we were talking about that earlier. That looks like a trend support. In theory, this could come all the way back to like 5 if need be. We'll see. If it catches above 505, it could be in a good situation. But I could definitely see it coming back to 5 here. And just making sure this is all good. It does have a cat ear vibe. So right now, the danger is, of course, that this is not reaccumulation, but distribution. Very, very cautious about this. Excuse me. Do you see that? Hopefully it's obvious to you at this point. There's the little M on the middle between the ears. This is the second ear. So it's a good time to maybe recap what's the difference between a bullish finish versus a bearish finish on the cat ears. the second cat ear, I typically call it a foretop. And the reason I do that is because of this motion. Okay, so the second cat ear is often very flat. I've talked about it like it's chopped off. And it can form out a distribution or an accumulation. On the whole, what this typically looks like, if you're looking at it from like a zoomed out perspective, is it just looks like a large M shape, right? And because it comes after the, I'm not trying to use this as a line of support, I'm just trying to illustrate it. Here, I'll put it over here. Because it comes after like ear number one, as we might call it, ear number one often kind of gives you the impression of some kind of a wedge action. Usually you'll see between the two ears, you'll see like another little M, you know, just to make that clear. It's the same thing, okay? Whoops. Whoa. The price travels back in time. So this would be like your first, which you'd call like the paw, which is like the higher mark, and then you come down and you have ear one, which is usually more of just a reactive move. It might be your auto reaction, might just be the initial support, might be a phase B top. There's a lot of ways to kind of see it. But then typically in the difference between these two, and I'm going to go ahead and draw another one that's got the double top here. The difference between these two is pretty straightforward. So I'm going to draw them the same, and then I'm going to show you what I mean. So there's a situation where this distributes, where that top basically comes back above. I'm not going to extend that out. The top often will come back above itself and not manage to go. And again, I don't have all the parts on this one, so I guess I should do that real quick. It can be connected to the original buying climax, but it doesn't have to be. So one of the errors that you might make early on is thinking that that's a breakout, but it may not be that simple because, for example, like that could look like it's breaking out, but really be a distribution because the buying climax isn't actually like part of the range. Like it depends on where it is and how it maybe relates to it, but it could be that that's actually, the range is actually much lower, if that makes sense. Like this is the real range. This is where you'd want to see a reaccumulation form, right? So one of the dangers is like, I know I'm using this initial line, but it may not be that simple, you know? So what you're watching for here is that those creek crosses happen successfully. Let me show you an example of, and I know it's coming way back down to 5. That was kind of expected because this was just like a silly advancement. Yeah, so you may find that there's the easier way to kind of see this happen is what we've been doing on the lower, bigger picture, which is using like stuff like that, right? Like creek jumps. So in a bullish example of this, what's going to happen is that after you make this first advancement, typically, this is the more bullish example where you come up and you find that this M shape ends up being like an acceleration of everything. So this is one way to kind of analyze it. You could make it, draw it out differently, but I typically think about that. And then usually at this one, there's even like often like an up thrust that comes above this top or this top. So typically like in the distribution of these, there's a very similar pattern, but you'll often see an up thrust above this and it ends up being distributive. So as soon as you advance past the previous tops, you're going to want to see support build, you know, and that's where the idea of, hey, I don't want to go back down beneath the creek. That's what Booksy's always saying, stuff like that, because that's usually at that point you've made what we call like an SOS. This ends up being like an LPS or just a backup, and then you advance again and accelerate. Okay, so they can look really similar at first, but there's usually some pretty key differences. Sometimes you get like a double up thrust like this, where it just refuses to advance. Oh, what's going on, mouse? Other times, this one is just kind of a lower one, But as soon as it's kind of come through here and then you see that breakdown, it's often like over. It's typically we don't recover from that. Especially if this has already happened. It's like a if this, then this, right, kind of thing. There are some cases, like we just saw one recently, where it did advance. It seemed to advance early, right? And it did come back down, and it even looked like it broke through the bottom. You know what I mean? But then it recovers back up. And this is kind of like that example where, well, is that distributive? Was that a sign of weakness? Or was it just backing up to as far as it could to a creek? And that's where you have to make sort of a judgment call, I suppose, on what you think is happening. You know, this is not like a one-size-fits-all kind of thing. So there are times where this kind of price action can occur. And typically, like, one way to think about it would be like a spring, like a local spring. So that's where like this comes below. This happened to us in, I want to say it was back in like October or whatever. Not 100% sure about that time, but it's like something like that. But this was basically like a little micro spring action where it looks like it's going to break down and it reverses. It's kind of strange. Other people would call this a double flush, like 1, 2, and then it reverses again. So it's like a shakeout at the end of like a pennant. That's how a lot of people would see it. That does happen, but best case scenario, you get that move up. You don't make a significant new low, and then instead you advance back, to the top, essentially. If that makes sense. So lots of different paths towards the same end, but at the end of the day, you'd want to see this kind of advance, and then really that SOS is a lot easier to see when it's like that. That's kind of what we saw in the walk up into June. Looked more like this, but there was like a final push down. So it ended up being like that. And I think this stayed pretty low, but it pushed down and then it ended up going back up. So lots of different ways for the same thing to kind of play out on an accumulation. That's why they have different schematics. You can check them out. But the big thing I always watch out for is that hook. This is the one thing that if you've made that high and it's pushed up and you start sliding back through the range, I mean, it's after these markers have been breached, at that point you're in some serious trouble. So especially if that happens and it goes really high, it's really easy to tell. And it happens, we see it happen a lot. It's just a failure to advance, essentially. And so this looks like a double top cat ear kind of thing. But I think that from a goofy, like, hey, let's just draw pictures perspective, these cat ears can look really similar. Like they're almost the same, If you look at them without the alternate view here, they're fairly similar in how they move. But the difference is like where the supports are found, what creeks are crossed, how they break them in advance, whether you're retreating back through supports after you've said, yeah, we've got a support, and then you go back down and break it. That's not usually a great sign. It makes it hard to read. So when we're looking at this right now, I'm looking at it like it's these kind of smaller ranges, but you got to remember, like, we're in the midst of a larger setup. So do you see the cat ears? Yes, I see them. Where would you be? Probably the second one. Does RSI on the 1 minute have room to go down more? Yes, it does. Where would it go down to? I mean, it can go pretty low. If this broke down, this trend right here is one that I would look at. I'd also look at this one right here. So this is the one that we kind of ran off from and we didn't really go back to check it. So again, you're already kind of in this situation where you're like, all right, you could see this thing retreat pretty low. We said it might come back down to here because of this guy. It looks like it's trying to push below it. So if it doesn't hold 5, where would it go? Potentially down here. So this would then be what? Distributive, right? So it's just this massive push up with a massive sell off. So the way of shaking is out. It starts to look more like that range we talked about there, where you might get a turnaround after it hits that low. And that would be coming down here somewhere. It's kind of hard for me to judge because I have these other markers that aren't really relevant. They're just like me estimating things. So I'm trying to like ignore those right now, but I think this is still really important. But I actually didn't mark up this range like, yeah, there's one kind of low here, maybe around 495. Maybe. So if we don't hold this 5 area, which would be this kind of last known support right here, I think we would probably head back down to this one. Seems likely. We could probably see it dip beneath 493 if it were going to be like a spring action, and it'd be okay. None of that's written in stone. It's just, yeah, the way that it could happen. That looks good though. I don't know, there's parts of this that look fine. They don't make me think we're going to go lower. But the second cat ear is notoriously volatile. So it has a lot of massive ups and downs. And usually in rapid succession. It's pretty rare that this doesn't do more. I don't know if we've seen a lot where it's just kind of done that and sank. Here and there maybe. There is a divergence here on the 1 minute. Made a higher RSI with a lower price. It's 1 minute, so whatever. Yeah, I think pushing through that level down to 499 makes me think that that was a test of 5. We'll see if it can hold, and if not, I do think we're probably going to slide down to 492, 493. It's pretty likely. Where we go. And now we have another one that we can watch. It's higher. All of these are really temporary. They're just for this micro range right here, most of them. The bigger targets are still the same. The bigger supports, they haven't changed. I've been keeping my eye over on the side of the screen here, and I don't really see anything on GME that makes me feel like a whole lot's happening, I guess. It's kind of, I can still see the AMC price here and the GME price here. I'm not using the tabs for some reason. I guess it's just easier for me. I already got a lot of tabs. Yeah, I don't know. I kind of thought maybe we would pause here. It's looking weird though. It looks a lot like a potential shallow curve and or the beginnings of a bigger one. So let's measure it out. Shallow S-curve here might not be a bad thing. It'd be more like that middle scenario here. Thus far, I've been feeling pretty good today. I think this analysis has been fairly on point. Yeah, I'm a little nervous about this being like a halfway point of like a bigger S-curve. Seems like if it was, it could be, again, to get us back to that bottom or just slightly below it. It's like setting up for a potential drop down to that 850 area, 1850 area. Much like AMC, it's going to depend a lot on this like micro range, so it's kind of a bummer. Well, let's take a look here. I'm going to do like a fan, a little bit of a fan. Yeah, it never came down to that low, so if it is a cliff and you just nosedive off the cliff, it'll come back to this creek here. Like for sure, I think it will. Or near it. There's another one here. That is where it found support, so maybe that's better. Right there at the low. There's another one here. That one's a little bit higher up. That looks like more like the middle of the cat ear kind of thing. Like splits the difference in this move. I'm not going to worry about it too much because it's really, really small, like micro stuff, but let's see this range. See how it worked itself out. So again, like you had a low that had higher volume and then you actually dipped down and made another low. So could treat it like separate ranges, but these sell-offs are pretty gnarly here. Okay. So I'm using the last major support point from back here before it started selling off, and then I'm connecting that to this wick, and you can see that there's the that's the perceived kind of resistance line now. So that support has become resistance. It might be a little difficult to see some of that sometimes, but if you look at the general trend, you could have just drawn it from these two peaks, but if you look backwards, you can see that it was, you know, right here that we broke down. So just keep in mind, like, that's where the last support was. That's where a breakdown happens. It's probably important when you're entering a range, and it seems like that's pretty important. So I would say if it makes that jump, you might have some strength there. That's your downward motion. That gives me a sense of where the creek may be better than anything else. This does have a reversal here, so you might have thought it was really low and then it pushed up higher, but it's just going up to meet that. And I bet this is like a 50% wrap or something silly here. Pretty close to it, right around there. So we'll see. I think if you can push up above, sure, it would be like an advancement. Setting up pretty low. And I'm wondering also if we're going to, let me think. This also is like an auto reaction, but lower. Phase B bottom. So you could have a spring here. It's hard to say. It looks like a distributive action because of the volume on these peaks is really heavy, but it's possible that there could be a bit of a spring action here below 1990. I don't know. It's also failing, clearly failing to advance right now. Ooh, excuse me. How rude. Yeah, you can see that rejection, so. All right, well, that's gone. I'm not gonna worry about that. I'm gonna look at, I mean, maybe we recover it later here, this trend. I should probably keep it on there. This one, since I'm mapping it out, coming down, is, oh, what the heck that is. Excuse me. Oh, I think I was just eyeballing where it might land later. It was just an idea. We know it's already come lower than that, so I can drop it down a bit. So we're not confused. It's not actually like acting as a support right now, but you could use it in some ways to help define the price action, because it did look like it double tapped on that right there. How did I know it was going to do that? Because it was losing volume, entering what appeared to be like either a middle sideways action on an S curve or a turn. And if you don't see the advancement here, it's not going to go anywhere. So if I'm trying to catch a knife in this case, I'm not going to be looking for anything until it gets up here into like 2030 to 2040 range, because everything else would indicate down until that point. Yeah. And it still could have a drop in like a spring action beneath 1990 and recover. But remember, like, this is part of a micro area up here. So what we're really doing is we're setting up along that floor right now. And you could be setting up for what would be considered a spring-like action. Sometimes, and Talkfather and I have talked about this a bit, sometimes you get a big upward action before a downward action. You get something like that. Bukowski's got a name for that, and there's a particular kind of bottom set called an even atom bottom. And what it does is it has an upthrust right before it drops, and then if it's a successful bottom, this is very flat, and if it's a successful bottom, that's like called the eve. I don't know why exactly, maybe because of the structure, I don't know. If it's successful, this usually comes over the top, and then once it kind of breaches here, then continues. And it's like a really violent reactive move after this kind of flattening. So sometimes you do get an upward, what appears to be like an upward breakout, and then it drops. And that's a possibility. If it dropped first and it had like a hard drop now, I'd be a lot less convinced that something like that would happen. Does that make sense? So like this could already be it, right? And you could see like a deeper drop for a spring, and then it's just more of like a small scale, jump over that creek, and it's done. But there are times where you go up first before a spring after you've hit the bottom. So that could have been it. Could be like a double bottom right there with a reactive move up that could still then technically distribute back down into a spring. Because again, even though this might look semi-bullish on the teeny scale, like on 1 minute, you got to remember it's part of a bigger range right here that goes from basically $20 up to 23.30. So that range might actually have to have like a bigger move up and then back down for like a spring action. That's definitely a possibility. Just keep it in mind. That's all I'm going to say about that. It may not happen that way. It's just sometimes if this builds out like that, you might get a sudden move like that. So oftentimes you have to go up first before you make a spring. Okay, so AMC kind of held at 5. It doesn't look spectacular. It looks like it's kind of broken out locally here. I'm just kind of coasting today. I'm hoping we form this out correctly. I'm waiting for this. This is what I was talking about earlier in the day. Yeah, my expectation now is usually what happens is after you get, I didn't mention this before, but this whole pattern right here, it's like a 1, 2, 3, 4. It's a reflection of the larger pattern. So you see the same thing here, right? You can tell that that's like the cat ear, correct? Well, it's a nested version of itself. So it almost always looks pretty similar to what you see here. And this is what gives it the appearance of a foretop. if I'm being honest, because this is what gives you those multiple up thrusts. You're going to get like 1, 2, and then 3, and then 4 at the end. It's like a shrinking. So that's what gives you the usually there's 4 distinct enough moves. It can get really, really micro, but yeah. We can go back and like map any of them. Whoa, MPW just blew up. So I was saying if it didn't just go up, I was going to get out. I'm glad I didn't rush. Yay! Please don't be distributive. Please hold support. Sorry guys, I had to look. It's up 8% all of a sudden. So I was really excited to see that. Some of you don't care. You're like, I could care less about this stock, Booksy. You keep talking about it. I know, but there's a few people that got with me on this little ride, so I'm with you on there. I'm trying to like watch it go. Yeah, there's a bit of room here to come back down, but I think at this point, if we came back and retested this jump, we could do like a 50% retrace here and hit that 510 level, and we'd be really good shape because that would be like the top of this major downward creek motion. So not a lot of change in the calls. They're up a little bit, but I mean, that's kind of expected, I suppose. They wouldn't be up like incredibly just yet. The market has to kind of be convinced of a move before you see follow through. So yeah, Reese, I'm with you. It looks pretty good right now. So, oh, somebody gave me a super. I'm really sorry. Don't worry. It says third. What does that even mean? Let's celebrate their third super on a live stream. I mean, ever or what? Like all time? I'm not sure what that means. Sorry, guys. Just reading. So CryptoLink says, why do I only see an 80 all-time high on GME and people say it went to 480? I can't find that. Is it because of Europe? Analyze GME more, peace, ape. And then down below it said it did a stock split, not a reverse stock split. Right. So, yep. So like you may have some of the data, and I think someone else even answered your question for you. Sorry I missed it. I was just really stuck in what I was doing. 560, this is our local push to 560, this is our local SOS. Yeah, I mean, it will be if it works out. So Reese says it was a 4-to-1 split on GME on the 22nd of July 2022. Before that, the all-time high was 480. So I think he's answered your question. Can this happen again? What do you mean, like a stock split? Yeah. I mean, so a stock split usually happens when the price is so high that they start losing. It almost kind of like they start losing interest. Like people don't want to buy a share for $400, right? So they do a stock split and then you can buy a share for $80 instead of $400. So it usually helps with the volume. And we already know what the reverse stock split has done, so can do on a chart. But you get what I'm saying. So yeah. So my expectation is this is a shrinking iteration right here. And it looks kind of weird, like weak sauce, but I'm not there yet. We shouldn't overanalyze that part just yet. Yeah, so my thought would be that as this goes along, when you start seeing that, actually we can use the whole thing as it develops. It becomes one of it within itself. As you start using the whole thing, you can use this concept of shrinking if you want to help you sort of understand where the price action is terminating. It doesn't necessarily mean it's going to go up or down. It's just a way of, again, looking at that movement. So possibly, I would say like possibly this is roughly where I'd put it. Like we may just be making those M shapes. It's tempting to do this and like compress it a lot. I don't think that's out of the realm of possibility, but if so, this is a really weak push-up. So proportionally, you got to kind of look at it. This M right here, notice that this first push came up to this like second ear. If you're doing like a 1, 2, 3, 4, 5, you would say that's like the fourth pullback. We don't really see that here. We can kind of see 1, 2, 3, 4, 5 if you look really closely. There's a small pullback here, but you'd probably just say it's like halfway, right? That's just simple. So this did like a 50% retracement. So the motif here is that it's pushed up. Basically, it's a 50% retracement, and then eventually it advances again, right? And so if that's what we're using as kind of the motif, we probably shouldn't assign this as like this is some kind of early tiny M shape. You know, that would be really weak. I think what's more likely is, and you can kind of tell, is that this is like the same level. So it's wrapping around that 5 again, just like we did on this one. And now we're advancing back to 5, just like we did right here. So if I'm measuring like a shrinking iteration or something like that, I might, again, you got to be careful. You can see that that's just an M, but it's just a local cross. Like, don't get too confused by stuff like that. Just remember what it is. It's just a creek cross, you know. And ultimately, like, that could, you know, be a little misleading if you're looking at something like this and you think that's it, you know, oh, that's it. Well, maybe. I think it's more likely that this is just really flat by comparison, and so it's not even really including the top anyways. This one did. You see what I mean? You can get like overcomplicated with that kind of stuff real fast. Instead, just look at the general like kind of motion, see where things are. Yeah, if you can see it on RSI, sometimes it helps. I'm not really seeing this as super advantageous, but I guess my expectation would be that this is not the big shape. Like, so I know I'm making very little sense. It could be, I don't know. If it's really accelerated, it might be. So what that would imply is that we would probably just break out here and just this would be the next up thrust. So like this M is actually going to jump, you know, and you're going to leap over. Again, things can get kind of complex. I used to do a lot of iteration mapping, and it's fun. It can really help you pinpoint breakouts. But as volume drops and as these things get more and more micro, it becomes stupid. Like, I don't know, say mean words, but it's like a waste of time. Let's just put it that way. So you can have it the way you want to have it. If you want to do that kind of stuff and try to do it, go for it. But like once it gets that small, it's kind of like, who cares, you know? Just watch the jumps and see if it's advancing. That's what I would do here. So my expectation is 100%. I already know this because we've seen it on the big picture, and you're able to go and analyze any of these tops. You'll find that this second top, the second ear, if you will, is really just a shrinking version of everything else. And that's why you end up seeing it kind of narrow price and the volume drops and it gets really flat looking. It's kind of always advancing along some major creek motion. I think it's algorithmically, I think it's just the operators are exhausting a range. I think they're just seeing what they can get from this second motion in basically in that late phase B, early phase C stage. So, yeah. I don't follow trading with emotions. He's probably one of my favorites though, because he's, in my opinion, he's a pretty humble guy. I don't think he would say that about himself, but he seems like a really nice dude and tends to be very straightforward in his approach. But I don't follow the same things he follows, and he follows, his methodology is similar. So sometimes we end up with similar results, but it's different enough that we've had some pretty stark contrasting opinions about things in the past. And I'm not criticizing him. I'm just making sure that you're aware that I'm not always going to agree with him either. His stuff sometimes reminds me a little bit of BAM, because he has like points of interest. He talks about these like pivot points, and it's interesting because the pivot points that he talks about are almost always, it reminds me of what like Astro used to do. I don't know what Astro does nowadays, if he still streams. I really don't follow very many people anymore at all, but like we found that there were a lot of similarities because you come up with the same answers sometimes. So like Astro had this really cool indicator that he built that was supposed to detect springs. And what I found is that this is true. Like, this is really what happened, was that his indicator would always mark off these ends. Like, it was almost always like these motions at the end of an iteration, or the cat ear, as I called it. So once I realized that, I was kind of like, well, is it not useful? And the answer is no. I mean, I thought it was pretty useful, but it was like he came to, I don't know how exactly, but we both kind of came to that same conclusion, like that these were really important points of interest, is what I think that's what TWE calls them. And so, yeah, I think there's a lot of overlap, but no, I typically don't follow his work. So anyways, I guess what I'm saying is, in practice, I've never really been a big proponent of copying and pasting fractals, although I'll use them in comparisons. I do comparisons all the time. And I mean, that's where a lot of this stuff comes from. But at this point, like, can I do this? Can I draw out these diagrams without a fractal? Yes. Can I analyze them according to Wyckoff? Yes. Can I analyze them according to waveforms? Yes. So do I really need a fractal example every time? No, I don't. And I don't need a preconceived notion either. And that's kind of why I often don't like to use them, because it makes you think that something has to happen because it's following really well. It might happen, if it follows and it's also bullish. If it's a bullish fractal and the current time frame is also bullish and you hit certain levels, they're probably going to relate because of the structure of the diagram, the structure of the breakout. There will be very, very strong similarities, very, very similar moves. This is an algorithmic computerized programs are going to run the same things if there's similar conditions. But if the conditions are like slightly off, you might have a big backup to a creek where the original fractal doesn't. And you might even have it, if it's way off, you might have it follow 1-to-1 until the very end. Classic example of that is the very, very, very strong fractal connection between the reaccumulation that happened from February into May, late May of 2021. That fractal, y'all, is like almost a 1-to-1. I mean, you can basically 1-to-1 it with the fractal into November of 2021, but the results at the very end are completely different. I mean, it's the difference between this and this. So naturally, like, do I think that there's an algorithmic component that causes the fractals to look the same? Absolutely. 100%. So do I think that sometimes fractal people get it right? Absolutely. 100%. Sometimes they get it spot on because they've grabbed the right one in the right situation. And it's like really good. And I'm not saying that it's not a valid method, but that's what I did when I started in November of 2021, which is right around the time we were breaking down. Very few people are still here that probably were with me then. Some of you might remember, but that's what I did early on, is I just did forward-thinking fractal analysis for AMC. That was it. Like I didn't add these other things because I didn't think that dynamically about it to be straightforward. So he's continued down, I think, at least from what I know it's changed a lot. Obviously, he's developed his own kind of system, but a lot of those folks that were around at that time that were doing those things, they kind of stayed with that. Like if there's a few people that still really do that, I don't really think that way anymore. And AMC's done enough crazy stuff at this point that that concept of iteration is really what gets people. It's what gets me. So I know that it gets other people. This idea that you could be playing out a larger version of something that's typically really micro is very like real deal. So yeah, volatility windows. I believe that. Yeah, I've seen some of his stuff. I remember when I was on Twitter, his call outs for those kind of price action changes were usually spot on. But I didn't feel that direction wise, it always felt like it was kind of like, and I do the same thing, you know, so it's the pot calling the kettle black. Because there are times where like, especially like in sideways action where you don't really know how it's going to develop. And it's funny because there's this weird expectation that traders shouldn't be flip-flopping. But the nature of a trading range is all ongoing. Like it doesn't ultimately, until you have the full picture, you don't know, you know. You can make some guesses based on previous price movement. But there's no methodology that exists. None really. Maybe Elliott wave, you know, which kind of anticipates based on an early move what should happen next. I mean, everything has some of that in it, you know, but there's almost no methodology that assumes continuation or that assumes reversal. Like they're all kind of like wait till the range forms because you can mark it out as you go and you can see how it's developing. So the main problem that I think we have with the fractal analysis is that it usually assumes direction. And the first biggest mistake I made with that was in, and I can tell you exactly when it happened. It was right after I found that thing that I now use as like a master example. But I mistakenly thought in the beginning, this was in January of 2022, because it was like December 30th, we broke down, and then we went low, and it was like January 9th. The reason I remember those things is because that's when the market hit its all-time highs and really reversed, and AMC started to really tank low, and that's eventually what became the March move, you know, that reactive move back up. That particular fractal, though, right in that pocket is just an M cross, but it doesn't end in a bullish action. It ends in a distributive action. And I, at that time, was thinking that this whole thing was building out a really large spring. And even at that time, I remember Stockfather and I talking about maybe a double spring. But AMC had other things going on. And on the big picture, it was not a spring. It was the end of a hook, a massive hook, which kind of looked like a spring. It kind of looked like it was bottoming, you know, after that drop from November. But I remember that distinctly because it was very fast. I mean, this is a very short amount of time for me personally. It was only 2 months after I really started looking at it. I was like, oh, this is not some kind of, you can't use this as some kind of a tool to predict spring so much as you can predict end result action. Like there should be an end result action. So right now I'm looking at this like this looks not great because notice that it's like listing down. you've got a bit of an S-curve. The up thrusts that we were talking about earlier don't seem present. So we're either in this kind of situation where we're facing a potential, up thrust with distribution, or you better catch support soon, right? And you don't have a predetermined outcome every time. Like sometimes, and this is, Wyckoff, it's like sometimes you're going to go for a spring. There's liquidity problems that come up. So like we could catch here and reverse back to the upside, and I might even say that was the M shape, but it didn't do what I expected, which was potentially either stay flat or go up. Instead it went down low. And like those are things that when you look at them on the big picture, you're like, oh, okay. So there's, on these little micro levels, you're always seeing tiny ranges play out as they pertain to a larger range. The same applies for fractals. The literal definition of a fractal is a iteration that is made up of other iterations. I mean, it's a version of itself that's made up of other versions of itself. It's like built upon itself. That's what it means. It's not a weird concept that a bunch of YouTubers made up. In fact, Investopedia has had fractal analysis on there for a while. So why are people using the word fractal? Because that's the trading pattern, right? It's built upon. It's like how people are trading. So the whole concept of a bars pattern being predictive is that you're looking at it as if that's the way this stock is being traded. But if you don't have the right macro view, if you don't have the right like big picture view of the way the stock is currently being traded, because you don't have a proper understanding of who the operator might be and what the bigger picture might be, you're going to look at these micro things and think that they're going to end a certain way, and then they won't. So what happens is that we often get the pivot points right because we're seeing very clearly that something should happen here. You don't even need to be a fractal guy to look at that and say it's a wedge. You know what I mean? Like something should happen here. You're going to choose a direction. But the thing is like by me grabbing like a bars pattern, I'm kind of like doing what I'm doing here and saying that, well, it could go up. And I don't find that to be like a great learning tool for me. Like that's really just me saying, well, it could go up, it could go down. And people accuse me of that all the time. They'll say, well, you just draw all this crap and then eventually it hits something. Yeah, you're right. That's me illustrating like what my thought process is. But the problem is that the folks that typically say that, they're not here when I'm doing it. So they just see this and they go, well, so you just think it can go up and go down. And I'm like, well, no, did you hear what I said? Like I said, this should catch around 5. If it catches around 5, it might show some more strength. Like I'm informing you of like what I think is happening with liquidity, right? If this pushes high and it sells off low and it comes back down beneath the creek, there's a liquidity problem. That's the learning process. Like that's where you actually develop like intuition, I would say. And that's a weird thing to say. I don't think you can develop intuition overnight. I don't think I've developed my intuition completely either. I think people trade the market for like 30, 40 years and they start developing that intuition about it because they understand like what's going on with volume and price and how it might affect the market. You just don't see that. Like fractals don't include volume, for example. Like that's a huge, huge problem in my book. Like that's a huge problem. That's not the way I want to do it. So I might occasionally like use a bars pattern to just illustrate, hey, so this is what I mean when I say iteration. I'm talking about, a pattern that makes up itself, that then makes up itself and so on and so forth. Like that's a good way to use it because you're illustrating it. Or like the other day when we did the comparison, like yesterday or whatever it was, to January, instead of just taking a bars pattern and slapping it on the screen and saying, here's what needs to happen, which is never going to fit. It's never going to fit just right. Instead of doing that, do a side-by-side comparison and look at what was going on with volume, what was going on with those ranges, where were these advances, why did this fractal move up here versus here, and like what was happening with creeks and what was happening with liquidity and the volume at that time. Are we doing the same thing? And if the answer is no, then you've immediately discerned that the fractal's not going to fit the same way. So you don't have to waste time like stressing about the fractal fitting when it just might not fit the same way. But if it does continue, here's some points where we might have some intersection. I don't really care if it looks the same in between. I know that on the whole, like there's a larger picture at play. And if there's a larger picture at play, it's following a structure. Does that make sense? So then you can just kind of pick out, like, here's the major lines. That's why I tried to show in that video last night is like, yeah, like I know I do spaghetti. I'm not ignorant of that. I'm aware. And it's a learning curve for me. I'm trying to lighten it up a little bit here and there. But you have a lot of really important critical markers that come from that comparison that could be very indicative of the future. I don't really particularly think it has to get there in exactly the same way that a previous chart pattern did. But if it's bullish, you would expect that advancement to these particular points because of the bigger comparison, right? On an advancement. And where often these markers are structurally important, usually because of waveform or whatever. And that's what those were. I mean, the one that I picked out that I thought was most important was a waveform comparison, you know? So if I go back to AMC here, the one that I think is the most significant is that initial one from the bottom, basically. This guy right here that goes up. If it shows up on the screen, it may not. Yeah. And actually I think it's a little higher than that, but this is one way to look at it. This would be one way to look at the overall picture of the structure, you know, in a way that's, you know, you could potentially compare this to previous examples like January. So you could do that. I actually think it's more like here though. So this would be like a waveform where you're moving, you know, in a certain pattern across the stock or across a trajectory rather. You know what I mean? And it does give you valid results just like anything else. That's the basis by which these fractals appear anyways, is they're just accumulations and distributions on a sine wave, essentially, which make up larger accumulations and distributions on a sine wave, which make up larger accumulations and distributions on a sine wave. That's charting. So there's been so many times, I remember, I just remember so many times, like on Twitter and junk, when I used to be on there. I'm not on there anymore, but when I used to be on there, there'd be so many times that I would have people link me to other people, or they would just drop a fractal in my chat or whatever, and they would say, dude, I think we're here. It's so obvious. We're here. You know, I mean, it's just every friggin' day you'd have somebody come on that just knew better than you. Like there's always somebody smarter than you, right, on Twitter, and they're always like, you idiot, we're not there, we're here. Don't you know how to do this? You're such a noob, you know? Same exact thing every single time. Same exact thing. And every single time I would look at it, what they would be showing me is they'd be showing me something like this. Like they'd be showing me like an M cross. And I'm like, in my mind, I'm like, dude, that appears everywhere. Like you literally can find that in any structure anywhere. So for someone to tell me like that, because this one resulted in upside, that just means jack diddly squat to me. Like at this point in the, like it means nothing to me now. If somebody shows me a cat ear, I'm like, well, yeah, it's there. You know, sometimes they end really distributively. Sometimes they don't. But I don't think that the 1000% move that you want to have happen right after it is going to happen after every one of those M shapes, because there's literally like thousands of them, you know. So I think that this is probably the foretop. I've been talking a lot. It looks like it did shrink down really, really small. I think that the initial thought we had here was that this was probably too small and that it was probably going to form out bigger. That was just me anticipating like a probable outcome there that wasn't positive, or that was more positive, I should say. But I think this is probably it. You can see very clearly that swooping motion. You see that? And you can see like the 1, 2, 3, 4, 1, 2, 3, 4 there. So I think that's probably it. It's about to scale. So does that mean it's weaker? Well, maybe, you know. It doesn't look super strong to me right now. But it's not finished yet. Like it didn't really, at this point, it hasn't really broken down just yet. It's like right there. So I haven't messed with this very much, this line. So let's go back and make sure that this is 100%. Like we're really confident this is the line. Because I don't want to split hairs unless I'm sure that that's the hair to split. So and you have to understand, like, just because excuse me, just because the cat ear structure breaks down potentially doesn't mean that there's a 100% going to be like a strong distribution. You have to then look back at the creek levels from the previous one. So in this case, there's one low that we've already got here. That's this, near this red line. So that looks like it's going to not successfully go. It's like an SOS. We might have a backup here locally. Thankfully, this didn't come too high, in my opinion. I think it looks okay. So there's nothing about this particularly that looks super wrong to me. Yeah. So I think for now, it looks like, again, it could come back down. We were talking about this level earlier, maybe that 493. But we've got a lot of space above 484 too. So like locally, could this break beneath the bottom here at 493? Yeah. And if it did that, this top range would be finished. You don't necessarily need to see anything crazy happen after. Some folks at that point would probably use like a wedge breakout target down or whatever. I don't usually measure it very much. I just kind of look at it and just look at where previous supports were. So at that point, you know, if it broke here, probably say, I'm going to use, I mean, it looks pretty much right where it should be. I'm not sure I want to move it. I'll try. Let's see if this one works any better. Yeah, see, that looks worse to me. I'm going to use that one. And then, you know, we have to remember what we just saw. So what we just saw in the lower time frame is something like this happened. We had an early advancement, and then it went way low for a creek. So that's also something to consider is like, how are we currently trading? And we just saw this happen on the bigger picture. Like we had an early advancement, right? And then we went like way low down here along this creek body. So we're favoring those deeper retracements right now. This is another thing to consider. Like, oh yeah, this just happened to us on the big picture. You know, we had a really deep creek retracement after pushing up higher, and then, you know, so those things happen. So yeah, I think that we reset that line, and I think we got it a little bit better this time. I'm gonna kind of consolidate these ones so they're not so messy. They're basically sharing like the same concept here. This red and green line. The yellow one was more about like a wrap around a different area. Obviously that didn't happen here, but it could still happen on a larger scale. You know, like it could be like over here that happens. So I'm going to keep it on the screen. I don't really care if I'm off by a couple hours. It's not a big deal. So and I'm looking at these previous floors. There's one down here at 496, another one down at 493, and then probably like 492, 491. So those are potential places that we could see. Yeah, so if this is like an auto reaction, Yeah, we could see this form out for quite a while. It is weird. Charge point, I'll go back to that. Somebody's asking about it. Yeah. So charge point had this weird backup where it went, I don't like it because it dropped beneath the main trend. So at this point, if I'm just playing a trend, I would say it looks like it broke down. And it's also beneath what I think is like the main downward creek, which is this thick white line. But, and I will say this with some hesitancy, this is the same kind of thing we've been seeing on a lot of these stocks, is that you're watching to see if it's a grab for liquidity until it isn't. Like, surely this could be a head and shoulder, or it could just be like a double bottom, like a double dip into low liquidity, and making sure that we're ready to advance. So I would wait for the resulting action. So if the resulting action here is some kind of a distributive action, and we start dropping below maybe the previous bottom, yeah, I think you could be in some trouble. At that point, probably heading pretty low, probably going to come back down here. I would imagine. I don't think there's any gaps below that haven't already been filled, but you could head back down, and then you're really at the whims of a retracement because you're outside of that trend. So yeah, I mean, a little bit of a widening price action, so you could see it coming pretty low, like maybe back down to like 143. Seems crazy, but I definitely could see it as a possibility. 148 perhaps. 135 is back down here. I know it seems like a lot, but this has already made like an advancement here that's pretty strong. It's pushed up. It's trying to hold. Every time charge point has tried to make this advancement, it has failed. So it's important to remember, like, you're fighting against the historic trend here, and therefore it's going to be a challenge, and the expectation might be that all three of these, this white, this yellow might end up being a support, but there's no telling. This could have a really deep pullback to 156 or something. So locally, what I was looking for was this. So I said, I think a couple days ago, that I wanted it to come back up, and it did. And then I said, well, we really wanted to catch here, and it didn't. So yeah, this would have been a lot easier, because then you just got like a simple flag breakout, easy enough to understand, right? And instead, we're kind of waiting because we're not sure what's going to happen next. Is it going to go down low, retest 160s or something like that? Maybe. Our side's got some room to move on the 30-minute. You might want to take a look at the options chain, but ChargePoint doesn't usually have a very active options chain, so it's kind of not a good one for that. So at this point, if it's a double bottom, which it could be, it kind of reminds me of that that deal, and I don't think it came too high here. It's funny, I put the marker on there and it just, nope. You could still have an advancement from here, is what I'm trying to say. If it's a double bottom situation, boop, boop, then I think you could have a pretty strong reversal. You probably head back up to like 2 and then consolidate above. But I also think that it's in a precarious situation because they've, on pretty light volume, it's been dropped. So I don't know. That's why I'm like not really positive it's something serious right now. It doesn't look like super heavy selling to me. But yeah, I guess it's possible this hooks and fails. So if you're watching it and you want to watch it, you can just do something simple right here, like a downtrend, and just see if it manages to break this within the next day or so. And I really would say at this point, you want it to break it and find support above 175, this area. I feel like that would be the best case scenario right now, is holding over 175. Oops. I don't want to do that. It's still in a position where I think if this holds, it's going to make an advancement probably to like the threes pretty easily. As long as we hold this advancement here, we should see a pretty significant move up to like 240. But my timing's always a little off, so. Yeah, I saw what happened with NVIDIA, and another one to a little bit be careful of. So NVIDIA is running up to the top of a big long-term trend here. So when you go back and you look at where this started, this is a massive move, by the way. I mean, you've gone from like $5 not even 10 years ago to $1,000. I mean, what an insane return on that investment, you know? Buy and hold, right? And this to me looks like an M cross. So when you look at this, it's like, oh, it's just making higher highs, right? I think most people, if they're looking at an Elliott, would probably say it's a 1, 2, 3, 4, 5. I agree, and I think that there's a strong enough chance that this is gonna. I don't know exactly what's going to happen, so I'm not going to say that. But there's a decent chance that we don't see. I hate to be down on a stock like this because it's like, I don't really know. It just seems like a bit of a cool off is not out of the realm of possibility here. Like most stocks, after they've made their markup, they're going to mark up and then they're going to like chill for a bit and then mark up and chill, mark up and chill. And we might be entering one of those stages. I think everyone's just talking about it because of how wild the last couple of years have been for this stock, just breaking all-time highs constantly and just pushing. But, volume's coming down. A stock split would help with that. RSI is way overblown. It's coming to the top of a previous channel. If it breaks from there, it's really going to be looking very parabolic. But I mean, how high do we think this is going to go? And ultimately, is it going to continue? And I mean, it's a tough question. I don't know. To me, it looks like a parabola that eventually would break. We talk about this stuff all the time, in the market. We're watching stuff like day to day, and we talk about these curves, and they have narrowing price action just like a wedge might have. Then they're probably at some point going to have a breakdown. It's not there yet. I don't think it's breaking down right now. It's another one of those ones that I'm like, I don't know, man. Chasing a stock when it's run this far is kind of tough. I mean, if you're already in it, awesome. I'm super happy for you, really am. But if you're not in it, I'm not sure I want to buy it for $1,000 a share and then watch it plummet back down to 280 or something. I mean, it's just a really tough call. So yeah, usually this right here is a pretty good indication of where it might fall back to. So if it gets overblown, it's very similar to a wedge in that way. So it would be like the same as this original range area. So if it, for example, right now, if it dropped, it's fairly common sense, like, oh, it may go right back to, 140. That's insane. That would be a really big drop. So, and I get it. There's the AI stuff. Yeah, I know. But all I'm telling you is yeah, maybe we can go a little bit farther. I don't know. It doesn't seem impossible. It's already kind of at the tip of So it's either going to go like a little farther and just kind of have a massive like squeeze motion at last, or it's probably near done because it's already at the top of this trend. Some of you are going to be like, no, it's just going to reverse split and then keep going. It might. But and then why don't I just wait for reverse split, and see what happens? I don't know. It just seems like a lot to risk. I'm not against it. If you're in it, good for you. I'm really happy for you, actually. It's a big, big play. Unbelievable returns over the last 10 years. But a lot of danger in that. They have a monopoly on AI chips. Once Microsoft and Apple release their stuff, they're going to have a big correction. You're probably right. Yep. I tend to agree with you there. So, you're probably right. And you better believe it, like all the people that have made insane money on this, they're not going to be holding their shares while the stock is plummeting, Like as soon as a sell-off starts here, and there will be one eventually, because it will correct at some point. But as soon as it starts, it's going to be a bloodbath, If I were in this right now and I'm up from 10 years ago, like 50,000% or something, I'm probably done. Like, I don't know what else you want. Like, I just don't, like, why? Why put that to the test? It's just, I don't get it. That's an insane return. It's kind of like, at that point, I don't know what you'd be doing. So I feel like as soon as it starts selling, it's probably going to be a bloodbath. These corrections have been pretty large too. They look kind of small on the chart here, but these are 60% corrections. I mean, they're big because a big chart. So for this correction to occur here, maybe it does blow it up to 1500 or something, but I'm measuring out this correction. It looks like it would come back and check this rising channel here maybe, and that's a big correction. So that could be a chance if there is a reverse split, or excuse me, a split, not a reverse split. That could be a really good chance if that happens and it does have a correction. That could be a really good opportunity to buy in, because you could have a sort of a similar pullback that we had way back here, back in 2002 or something. I mean, that kind of move happens here, you're going to have a potentially really great entry, because then if it happened again, it moved up again in a similar way over time, you could basically have another 10-year, 50,000% move, just depending on how the stock goes. But just, I don't know what to tell you about this other than it just looks like it's got to do one or the other. It's either just going to go straight up, which I don't know how that ends well for anybody in the end, unless you get out really quick, because it would then crash, or it's probably going to break down pretty soon. So it's nothing I'd be ashamed of. If you made a lot of money in this, that's awesome. I thought about getting in earlier this year on that pullback, and obviously now you're looking at it like, well, wish I had. But I had even talked about this bottoming in October on NVIDIA. I remember seeing a large, I was talking about divergence, but I remember seeing a really large divergence right here on NVIDIA, thinking it was a good play. But I don't think I would have imagined it going as high as it's gone. So back to AMC. That's actually not a bad idea. Credit card related tickers. You're thinking about shorting since our economy is doing so well. No, I don't have any in mind. Part of me is thinking about shorting gold and some of the metals, because again, if history repeats itself, they might crash. But I'm kind of waiting So last time people loaded up on gold and silver when all that jazz was back in the 70s, late 70s, and then in the early 80s, all that stuff crashed when inflation kind of cooled, and it wasn't a good long-term investment. Maybe it's different this time, but that's something I've been kind of watching carefully. Because I think a lot of people anticipate those things like too late. You know, like we think that if I get gold now, but now, like after, what do you mean? Like, you know, if the dollar starts gaining strength again, it's like those things are hard for me to see sometimes myself, and I didn't invest in like gold before all that happened or anything like that, but it's one of those booms that typically occurs a little too late in inflation, and then usually crashes. So yeah, well, it's turning into one of those days where we're seeing like a lot of chop midday. It's typical. I mentioned first thing this morning, I'm probably not going to stream all day, so the dollar is toast. Yeah. Yeah, I don't know about that. We'll see. I'm just saying, like, a lot of times if everybody's rushing towards something, it may not be the right thing to rush towards. You know, it's not always the case, but this is a weird series of rises here. They both have kind of a narrowing price action. It's very strange. You see that? It's really odd. I don't know what's going on here with RSI too. It's just like a slow climb. To be honest, it does kind of remind me of what happened here. You've got that slow push on relatively low volume until it tops off and then it drops. So I don't know. It looks like we might have a run up and then potentially see it nosedive again. It's not like I want that to happen for GME. It's just watching this floor, I'm not sure. I could see it having that quick move up and then dropping, like I was saying earlier. It's just my idea. It may not happen. There's another scenario here where if it continues to gain support, I think we might even approach this outer creek wall here by tomorrow. That would be a little different. Okay, well, so AMC is having some trouble here. So see, it's constantly kind of forming these U shapes. It seems like we're not trading very well above 5. So the first, second, third, fourth push, they've all been like weaker. So we really need to see it jump at this point. Otherwise, I think we're probably going to go back down for liquidity. There's something happened here, like big buy-in, volume dropped. There's nothing wrong with that, but we've got to see that follow through, you know? That's the big move. So we just haven't seen it yet. I'm talking about it since this morning. It'll rip when you stop streaming. Okay, well, that's happened yesterday. It'll go one way or another. Yeah, I mean, if I'm looking at it from a helicopter view here, this looks like a cat ear that could break down right here. And I think locally it did have a hook. I'm pretty sure that's it right there. We just saw it happen. So, you know, I'm talking about things on a lot of different levels here, but like I think locally that was the cat ear hook. So I didn't really talk about that very explicitly, but usually there's like a move right through the middle of the ear, and that happens regardless of where it happens. So it could happen here, it could happen there, it could happen anywhere. But remember what we talked about? This is what we were talking about on the bigger scale too, is that if that happens, you just don't want to see it continue down. Like it needs to then find support and head back up, or else it's gonna distribute. So I think right now, like this is the second ear's hook. Like it went across it. It was weird. It stayed really flat, which I didn't expect. Kind of thought it might stay higher here, but it didn't. It stayed really low. Lots of trading across 5. Heavy trading across 5 on light volume. So just being stuck and kind of barcoding. But these up thrusts they're like tests of, it's like check, you know. I'm not seeing any follow through yet. And now we definitely have what I would call like that second ear hook. It's always there somewhere, you know. So just to kind of relate this to our example a little more, it's kind of like that, right? So yeah. So that's where you see the main price action like occur. So we're at the end of it. I think this schematic's done. Turn off your stream and then come back. Yeah, the schematics I think is finished. So I don't think there's much else to do here. So it's just decision time. It's either that's a hook's going to stand, we didn't advance, or we're going to drop. Bearish Booksy here, the way that I've been looking at this lately, I've been seeing these moves and I've been just like, normally we don't recover, you know. In the more bearish downtrends that we've had on AMC, once this happens, it's over. You don't typically see anything else. But lately it's been a little bit of a mixed bag, you know. When we've seen these during these little bullish bottoms we've had, not the big ones, just the small ones, you see these kind of work out, and then, I mean, we just saw it happen on the bigger picture. It just kind of went right back up, you know, and recovered and went into like an SOS stage. So it doesn't seem out of the question that might happen here, that you could see some kind of almost miraculous like recovery effort all of a sudden, since this is sort of how it played out on the big picture, you know. Well, I don't know if we actually got a hook here. Hang on. I don't think we did. No, I take it back. I don't think we got a hook here. I think we went above. So this is definitely a little weaker. But, you know, if we're looking at this like, hey, how would you compare the two? Maybe this was a hook between 2 years. I don't know. This first one there. It's dangerous, man. And now this looks like a 1, 2, 3, 4 on its own as well. So it's starting to look like what we see on the micro. We talk about those 4 moves. You see it right there. It's very flat. So it also reads like a potential cat ear here, which would give you that down scenario. But I already kind of knew that was possible here. So whatever. That's how you end the week at 450. If you're just like not wanting to advance, you come up and you just create a top and you don't advance from here in a natural SOS. Instead, you just drop it. You know, you've got 1, 2, 3, 4 pushes, and that's your typical cat ear. So ear 1, ear 2, and then you go back and you look at where is the creek below them. It's here. So naturally, you know, a breakdown at this point would be could be pretty dramatic. I'm kind of drawing it on a curve. If it were to go really, really low, it would be more or less like a straight line. I mean, it could happen. That's more of like a macro breakdown / macro. We maybe call it a spring, but I'd have to look at it bigger picture. Yeah, maybe. I wouldn't feel overly confident about this if we broke down today. Well, it depends on when you cross. So let's say we only went to 450 today. This could be a massive like reversal effort. That would be horrible. What a horrible, horrible range. Yeah, if you ended the week at 450, 414, I'm just thinking. There's always a bear case, y'all. Always. That was funny. 414 was that level we got before, too. It's still being targeted. LOL, all these lines / indicators. I guess. You mean, I have like one indicator on the screen, but okay. These are just examples. They don't need to be here. This is a micro breakdown on a 1 minute, so naturally it looks clustered, but when you're up close, it doesn't. These are just possibilities based on what happens presently. Yeah, he's new. This is just me demonstrating something, and the rest of the stuff's just levels and creeks. There's really nothing here that's like way out of place. I mean, if you got rid of the stuff of me doodling, it'd probably look a lot cleaner, but I don't care about that. That's why I'm using like the negative space for it. Otherwise, what the heck? It's just space. Screen space. So what you're saying, Booksy, is we got to move. Yeah. I would say so. I would say if there's conviction on the part of bulls here, you need to hold these levels and take off. You mean this stuff? These guys? This was just like a demo of ranges. And I talked through it. That's what we were talking about earlier. It's like if you come in and you just like don't know what I'm doing and what I've talked through, it's like, yeah, this looks like a cluster cuss of lines. But I've talked through every one of these, so that's why. I just leave them on the screen sometimes. Probably. It might be, yeah, we're in a very tight situation right now, so I would say that it might be a good idea to consider your exits if things don't go our way. One thing that comes to mind when I think about these fake out SOSs, if it's a fake out, is there's a particular top that I always think about because it was notoriously bullish looking until the very end. That's this guy right here. And this advanced into what looked like an SOS back in December, and it looked like a clean SOS, but then it just started sliding back through the range really quick when it did slide. And it was one of those moments where you're like waiting to see if it catches, and it just never caught. Now my calls dropped quite a bit, so it's not looking good. Like significantly went down. It's not good. We'll see. Where am I? April. I'm gonna go like way back. Yeah. So these guys are often like they look like they're forming an SOS. Like there's a narrowing that's happening, and it might look kind of bullish to us at first glance. And I just remember there's one in particular that I remember being really frustrating. I'm trying to get back to it. It's this one. This is the one that I remember being really annoyed. Now it made a higher high after the initial high, which we did not. So in our current time frame, we're sitting like much more comfortably than that, and that, at least to that regard. But yeah, as soon as this went down below like this level right here, it was like done. There was a very clear. It was like this is not gonna hold because there was a zero stopping power, you know. So you had a big buy-in, and then the volume didn't shrink like incredibly. There's a lot of heavy selling here, but it did do that narrowing that you might see on a typical range. And then ultimately where it broke down, because you can see it has a similar kind of action here on the cross where you get this push away from it, right? And then it fell. So that's where, again, like early catches would be really helpful. And I don't even know if that's the best comparison, but it is a comparison to use. It doesn't have the exact same markings as ours, so it might not be the best one to use, but yeah, so it was like a failure to it's a hard one to read too, man. This range, I remember this really being horrible because it was like at the very last minute it dropped, but it didn't drop completely. It had like a double move. So it looked like it was going to recover or something, and then it just started sliding very fast. I think a lot of the problem was here, though, is this initial upthrust, and we don't have that issue here. It sets up lower. So a lot of the issue is that initial move past what would be seen as a buying climax. But that volume profile is hard to read. It's just so quick once it starts moving, you know. Let me do something really fast. So another guy was talking about indicators and junk, but I forgot we crossed the I think it was the 30-minute EMA. I forgot to talk about that last night, but it might be good to look at it now because we did cross those. And that should be relevant to us right now. So hold on. Where's the other one? Oh, well, yeah, I don't know. They're kind of low. They're down here around that 460 level. So it's the same idea of like you could see it come down low and camp until Friday. I hate that for us, man. I'd love to see it just not do that and catch here around 493 and just advance. We don't need all this extra nonsense. So it would be a lot stronger if we didn't come back beneath 483. I'll give you that. It would be even stronger if we didn't come significantly past 493. I said 497 earlier, but I'm thinking 493 right now. Those two would be pretty strong. The greater weakness being, of course, that we come down here all the way to like 463 end of the week, and then you're kind of left on a sour note where this is kind of advanced really far. They've made such a deep amount of space here that bears and bulls are probably both going to look at this like with some uncertainty because you're kind of looking at it like, well, there should be a buy-in right now, and we're not getting a buy-in. So unless it happens like 2 minutes or something and I've just missed it, then we're going to see some chop and some lower levels. But this is such a long-winded creek because of the gap here that it does make me think that we might be in a situation where we got a bit of a head fake. We might have this kind of reversal chop that brings us back down to 460s end of week if we can't see the recovery soon. I brought up the example because that one, it's a good example of like a perceived bullish action that then turns really bearish all of a sudden, and just remembering like how that worked out for us. Turning on extended trading hours, I want to see something else. So during extended trading hours, we spent a lot of time at 490. That's kind of interesting. I don't really see anything else to look at. With extended trading hours on, this is a jump over those EMAs. And actually, it kind of already looks like, starting to look like this already, you know. It's not as pretty. Definitely looks like a cat ear about to break down on the RSI. You can just see it sliding. Okay, I'm going to do something real quick. So I'm going to do a 50% cross. Doesn't need to go that way. I'm going to turn off extended trading hours, but actually I think that's right because it's got the, see how it's got your attention right here with it too. So it was like establishing like a midway point between these two peaks. So if you're looking at a waveform, this would be like the bottom and the top, and you've got like a midway point right through these markers that actually hits it. So I think it's pretty clean. So in the event of a breakdown, I think we're right on the money here. If it were not to advance from here, we're not quite done yet, but if we're not to advance from here, I think you could see it do a 50-50 right around 483 and come all the way back down. It's sort of like the exact same thing that happened here. You have this like big push up, and then it fails to advance, and then you just kind of walk back down through the whole push up again. I don't want that to happen. It's just a similarity. This actually looks like that paw and cat ear. I really hate that. I don't like that formation. Yeah, so I'm going to turn this off now. So I know where those are. Right. It looks really low here, but it would be like the first big pullback that we had on Thursday. It's super low here. It looks like completely wonky. I think it did it again here. So it follows. This should be it. Kind of got a repetition of action. Actually, it looks higher. Like that's it, way up there. These guys. Yeah, that's the swing. I don't know. It just depends. Anywho, yeah, this looks like it could drop pretty far if it doesn't hold where I kind of suspected we might come back down here, but we need to see it recover soon. I don't want to see it hook beneath this level. It's a long way to go. It's a really weak sell-off, though. I'm not seeing a lot of volume on it, so that's something. It's broken down again, so it's wrapping through that level. This actually looks like an S-curve. Let's get a measure on that. 489. But if it's an S-curve around 5, then it's probably done. This looks like an RSI reset too on the 3-minute, like from the top. It's the same deal. So now the RSI is kind of going back down. Let's see what this 6-minute looks like. 6-minute has a ton of room. There it is. Right to 489. Yep, that's ugly. There's your sell target. Those are your sell orders picking up. Stop losses and crap. Oh man. Ugly, huh? Yep, it's just going the opposite way. So this is like the danger of waiting and waiting and waiting for some move to happen just because we saw that, oh, hey, it kind of happened this way before, maybe it'll do it again. And you're just kind of waiting for some magical turnaround. It clearly dropped the creek right here. So there was no reason for me to be like, oh, I don't think it's going to go lower or could hold. I was already below it. So then you're really just looking at lower trends at this point. And I don't know. I mean, that's kind of all there is to it, that move. Now you're just kind of moving down. And we'll see what happens. I mean, the candle might get bought back up, but even still, like, just nothing. This one looks like it's probably finished. This was the bigger curve I was just talking about. I think we said 489. It went to like 486. So it's pretty close. So that's finished. But then, you still have a lot more to contend with here as a micro range. So again, like, were we right about the fact that it was about to finish? Yes. Did it go the direction we wanted to go? No. And I think this hooking action, at least not initially, it went down first. So this initial action right here, that was the cue. The problem is that this is why, again, like any kind of analysis, it can't just be fractal stuff. Like, it has to be holistic, because you had this clear push over here that to me was like a dead giveaway. And instead of me being like, well, yeah, it's probably going to go down, which is what I've said previously, I'm looking at the big range like, well, this has been playing out in this way that sort of demonstrates that this had these deeper pullbacks, so we might get this deeper pullback, and then you're just kind of waiting for something to give, But just reading the chart would have given you the answer here. That move up was weak. I mean, and it should have been a dead giveaway when it didn't, at least initially, just this first move here, when it didn't even advance as far past that trend as the previous one. And it was the hook. It's kind of like, well, that's not what you want to see in a bullish price action. So we've got a nice wick off of that 6-minute EMA right down to like 480. It need to find support and hold over 493 in order for me to say that maybe it's reversing that decision to go down. Otherwise, I don't think this could be perceived as anything except for maybe a backup. I use that word a lot. A retracement back to that level. So looks like we're going to have to just kind of sit in it for the day and just wait it out and see what happens. I got other things I got to get done today, so I'm going to have to head out. I know that it's kind of timing-wise, you probably don't want to hear that, but I don't have a infinite amount of time, so I got to do some things and get it done. So I'll say this much. If we can manage to get back above the current downtrend here, back above 493, if the sellers knocked us down, this could be a terminal spring, where you get this really violent sell-off that recovers. But it has to be here. I mean, there's nowhere else to put it. Does that make sense? So this already had a deciding moment and went down. But the rest of this would have to be like an immediate kind of return back, way back up here, to SOS territory up at 517. And anything else today, and I'm genuinely thinking that if anything else were to happen today, we probably won't see that. We probably would see a continuation here, because sellers will pick up on that weakness, try to drive it to the next low, which is 483, and then we'd have to kind of start all over, with these moves. I think at that point, this top range is gone. Springs don't spring that deep unless it's a terminal shakeout, So again, it has to kind of immediately recover back above this level and then exit in order to be sort of a terminal move. If that makes sense. Otherwise, down. And I don't know about this idea of coming below 483 again. I think that's a bit more distributive than anything else, but certainly like that is an obvious target for the sell side here today. I think they're going to want to knock it beneath that level and try to knock it beneath that level. It could form out a larger range. That's not impossible. That's what the yellow's about here. I talked about that earlier today. That it may be just sort of a sideways action, and that builds out into a much bigger pattern here that, maybe it does break out, but it takes to the end of the week and then next week breaks out. Worst case scenario is still this downside. We didn't get the immediate SOS today, unless again it happens like now. We didn't get it, so this green path wasn't taken. We kind of knew that this was going to be the initial test. So once again, dipping beneath that trend. So at this point, worst case scenario is probably this final one. This could end well if it held support on the creek here and then advanced later. You could see this as like a very similar price action to what happened previously. We could see it walk down and then find support and still possibly advance, but you're playing with fire at that point. We got a lot of problems that you could encounter. And all it took is a drop, and I think you'd probably be liking what we saw up here in that end resulting foretop. If you saw that drop happen presently or down low, I think you'd be going to 414 come next week. So this would be one heck of a distributive hooking action if that happens. So today, definitely want to see it above 482 if possible. I know what people are saying. Somebody said earlier 463. I get that. And I get this idea that just because it comes down doesn't mean it's a breakdown. We came down here and checked that level. We didn't break down, But all the same, these are kind of advancing. I have it drawn as parallels, but they're advancing. So you still have this concept of there's a trend here that was broken and we found support, right? But then you have a secondary trend right here. It's as soon as you break out, where did you find support? It's pretty low, and that presents itself as a problem if you start breaking down. So I totally get why people would say it happened once, it could happen again and still go. Yeah, but this is it. I'm not going to give it infinite number of tries in my head. I don't think that's wise, I would say now is the time to hold. We've made the advancement. We closed above it. You don't want to close beneath that top. So I'll try to follow up at the end of the day about that and see what happened. Charge point just kind of sitting where it is. MPW did do the push up and then retrace back down to 514. I'm on a 2-hour chart, so you can't really see it. It need to hold 514 to have some positive moves here. Otherwise, just like we're talking about AMC, it could just be a potential hooking action here. If you don't recover, you're gonna ultimately retest this low again and possibly break down. Retest this creek, and break down. GME, I've been feeling kind of indifferent about it today because we already knew yesterday it wasn't making the advance. It had the pullback maybe find support here. I know people are going to look at that like it's an inverted head and shoulder type action. I don't think there's anything wrong with that. I'm watching it locally thinking there's a lot of different things that can happen. So, the way the creeks are built, they're built kind of wide. So right now there's a lot of space. The two outer creeks are way over and there's just a lot of space. You could easily not even get to them till Friday. There's a lot of downside that could happen, in which case you've got even more time to get to a creek. So we'll see. Just doesn't feel like it's in the best of spots right now. If it holds support right where it's at 2020, I think you might see it advance back to the first creek. I think that's likely for today. If it doesn't hold support now, I'm thinking it's either going to break down or have a terminal action here. And I don't know which is more likely at this point, but we're past in my opinion, we're past that main trajectory grab, which I said was about 11 something today. So I don't think we're taking like a hyper bearish path. And the fact that this set up really wide makes me think that you might get those creek crosses here, not way down low. Because if it went and dropped, you wouldn't even be able to get to that probably for another 2 weeks or something. I mean, it'd take forever. So it's setting up very wide, like a structure that's possibly going to reverse higher than lower. Okay? That's just the way I'm seeing it now. Yeah, I would just watch this really carefully. And it doesn't look like it wants to grab just yet. So we'll see. Anyways, kind of a letdown, at least initially. I was hoping we'd see it by noon, maybe. And it's priced out that way. It definitely got there, but it just didn't make the move up. So probably not going to see fireworks immediately. There's nothing, I don't know, like I say those things and I know that people are going to look at this and be like, dude, as soon as you turn it off, it's going to rocket. And I'm like, yeah, maybe. We've seen this kind of stuff before on an SOS where it pushes up and you get you do get the cat ears and then it has this really deep bounce and then you kind of advance again. This is sort of like what I see sometimes on like an ascending accumulation where you get these kind of quick pushes and then they drop really hard and then they suddenly advance. We've definitely seen it on AMC. I wish I could think of it as an example of this off the top of my head, but I don't think that's out of the question here. I'm just saying that. So if it is a terminal type action, you'll see it recover very quickly today. So right now I would say my buy-in point is 518. I mentioned earlier, like if it's an SOS, we'll see it finish with strength at some point. And ultimately, I think that's the support to beat is up here, like 518. So that's kind of where you're roughly going to have to see that confirmation happen on something like this. And everything else is just like I have it drawn spaghetti. It's kind of just like extras. You might get there, you might not kind of thing. So, yeah, 5 is definitely a big wall for us today. 505. It's been a tough one. So an advancement here above 505. There is we talk about I don't talk about points of interest like we were talking about with TWE, but you have right around, that says 1348, so it'd be right around, I don't know, 15 minutes or so from now. There's a possible place of potential bottoming, because if this is a waveform, this would indicate the cross section of those waves. So it's a potential bottoming area right here. Yeah, and then it could potentially come back up to near 5. If it doesn't ever advance, you won't see it advance past this particular downtrend, probably even the steeper one, which I didn't even draw. That's this guy here. Oddly, very similar to that yellow, but that wasn't really what I was looking for. You wouldn't see it advance past that. So there's kind of a window here of possibility. Yeah, worst case I've already talked about is that downside. So anyways, I'm going to go eat lunch and then I got some other stuff to do today. Yeah, I know. Most of the stock market looks pretty meh. There's some exceptions, but I think that I don't know, man. If it's an SOS, we're just getting a shakeout, and at the end of the day, it will advance. But I'm just gonna watch those levels. I don't want to speak out of turn. When you see a breakdown like that, you have to see the recovery pretty quick. So otherwise, you're just breaking down. Um, it's definitely not impossible. AMC's had those moves like this before. Could also, again, I said it earlier, it could be building out a much larger range here. We could be stuck in this little area till Friday, for all we know. This could just be the first of another wave, a bigger wave. So it's definitely not over till it's over. But I just wanted to make it clear, like that particular move just kind of gives me the sense that this is not an early advancement. I might be interested in seeing what happens when it gets to like about 10 minutes or so from now, like 12, 13 minutes from now. I might be interested in seeing what happens there. But yeah, I'm not gonna be able to sit around and watch it. So yeah, I did my best today. We went back and forth between a lot of time frames, so I definitely have the spider web effect going on. If I do a video tonight, I'll clean it up so you won't see all that crap. But don't worry. So don't worry. But it's just because I was doing a lot of time frames today. Anything else with GME? No, I think we talked about it all. Most of this stuff on GME was just me hypotheticals. None of these are set in stone. The only two real lines you need, there's one up top here that you want to grab, and then there's one right on that cat ear you want to grab. Those are the two downward creeks. The ones below it are all pretty low. I mean, they're all pointing to basically the bottom at 1730 or whatever, the gap fill. So you don't really need those lines, Like I could keep them on there just to keep them on there. But you could probably operate this chart with like 1, 2, 3, 4, 5 maybe. And then maybe this trend, 6. That's pretty much all you need right now. I just keep a lot of this stuff on the chart just because. All right, guys. I hope y'all have a good day. We will talk to you later. 485, man. Forget it. I'm so tired of that.